morning. Detailed wise, couple segment a little bit. So today we will begin with the partnership act. What's the page number? 160? And then can you hear my voice? Audio video clear? See, now we will begin with partnership without any delay. So here, if you remember the last class discussion, we discussed Companies Act in which the important characteristics is limited liability and separate liability, because of which everybody is treated separate for their own acts and they will be liable for their respective acts. And in case of LLP, it is not the same limited liability, separate liability only, but it still has an advantage of few advantages for partnership. Few advantages of partnership with respect to flexibility in organizing the internal structure of the LLP. Here, this partnership is entirely and this kind of voluntary kind of entity, where even if you don't need to, even if it's not registered, also it's okay. You can still conduct the business for the purpose of profit. So, partnership is an entity in which few people come together. Association of few people come together for the purpose of conducting some business for profits. This is what we call as partnership. The people who start the business are called as partners. And whatever they do, they have to compulsorily do it for profit. They can't do it charitable activities here. Charity is not allowed in case of partnership. The charity that is Section 8 companies are allowed only in case of Companies Act, not under LLP, also not under Partnership Act. Also. So, to begin with the basics, in unit number 1. General nature of partnership. So, partnership means it is a relation between persons who have agreed to share the profits of business carried on by all or any one of them acting for all. Here, as I tell, you should focus on some 2-3 words here. First one is, it is a relation between persons, not your relation. Masi, Jeju, no, not that. It is a relation between the persons who have agreed to share the profits. So I am trying to tell only the profits, what about the loss? Because business may be exposed to loss also, from the profit also. Here they are using the word profit is essential part to share the sharing of profit. Is it includes loss also? Partnership says no. It is not mandatory that you need to share the loss. The loss can be borne by a single person also. I don't care. But profit has to be shared by other people. So how do you share 99%, 1%? It is up to you. 99.99, 0.01. But there should be sharing of profit with respect to parts of a business. That means sharing of profit should be there. There should be a business. What is business? Any kind of activity where you do for the purpose of trading, manufacturing, selling, buying, all those things. Carried on by all or any one of them acting for all. That means if there are 4 partners can be part of the entire partnership firm for the purpose of conducting business. One is sales, one is purchase, finance, payments, etc. Or only one person can take the responsibility of the running the partnership firm, and others can just be the sleeping partners and different kind of things. So there should be a business, there should be sharing of profit, and it should be carried by all or any one of them acting for all. These are the 3 essential elements which have to be compulsory there in a partnership. And it should be 2 or more persons. Elements of partnership. They might ask this as a 4 marks question. Elements of partnership. Partnership is an association of 2 or more persons. Can you tell me, can I create a partnership with only one person? No, not possible. Partnership. The moment I tell partner, somebody has to be there. If nobody is there, then it is not a partnership. So 2 or more persons have to be there. At least 2. And the partnership must be a result of an agreement entered by all persons concerned. When I say agreement entered by all, what agreement? Not exactly anything between the partners. For example, it can be oral also. It is not mandatory that it should be written. For example, I contribute this much capital, this is my profit sharing, I take care of this. Any part related to this sector. It can be oral also, it can be written also. Both are possible. An agreement can be oral also, an agreement can be written also. And the partnership is organized to carry on some business. Some business. Charity is not allowed here. Charity is not allowed in case of partnership. 2 or more persons should be there. There should be an agreement between the partners. It should be for some business. It should be the business is to share the profits. Share the profits. Losses can be borne by single person. Losses can be borne by single person. There is no problem with respect to loss. And the business should be carried either by all or any one of them acting for all. It is up to them. 2 or more persons, agreement between the partners, sharing of there should be some business, share of profits, and business should be carried by all or any one of them acting for all. This is the elements of partnership. Again, a not association of 2 or more persons. Simply, I don't want to play the Twitter and the video again. Me talking to me. So at least 2 or more persons has to be there. And when I say 2 or more persons, a minor cannot be a partner of a firm. This is very important. A minor can be admitted for the benefits of the firm, but not with not for the as a partner in a partnership firm. But whenever you take 1 or more persons, even admission of minor for benefits, that also with the consent of all the partners may be admitted from the benefits of partnership. Directly, one partner cannot admit some minors and benefits from the benefits. You should talk to everybody. Everybody should give the consent. Then you can take somebody into the formula for benefits. Otherwise, now, what is the maximum number? As we know, minimum of 2 persons. Maximum is not given here, but maximum is given in the company side. The limit is 50 partners. Partnership act is silent. That is why I tell minimum 2 partners. Maximum 50 partners in case of partnership firm. And there should be an agreement. What agreement? Agreement between 2 or more persons. And it is a voluntary contractual nature of partnership. What do you mean by voluntary nature of contractual nature? It is not like you are holding the gun point, somebody at that point and tell sign it. No, it is not like. If you really want to be partner, partnership will be. It is voluntary kind. Then there should be some business. What is a business? Business includes every trade, occupation, profession, anything. For example, I am a chartered accountant. One more is also chartered, one more person is also chartered. We want to practice together. Yes, we can form a partnership and we can practice. That is a profession. That is up to us. I can practice by myself. That is sole proprietorship. So, existence of business is essential. Without any business, it can't be there. The second important thing is profit. Acquisition of gains is very, very important. You can't go for free. And agreement to share the profits. What is agreement to share the profits? Sharing of profits is an essential feature of partnership. But here, but an agreement to share the loss is not an essential element of a partnership. It can be both by single person also. But as per the agreement only it goes. If the agreement says nothing, the loss also goes in the profit sharing ratio. If you have 3:2:1 is the ratio, loss is also 3:2:1 ratio. Profit sharing ratio is 3:2:1. But agreement specifically says loss will be both by person A itself. Then it is only B and C will not be part of the losses. Here, this is important. This is 3 marks case study question they asked. So what is the question? See, sharing of profit is one of the essential element, I agree. But just because you share the profits, it doesn't mean you are partners. For example, me and my brother has one house which has come from ancestral property, and we receive a rent of 10 lakh rupees per month. What do? I share 5 lakh rupees, my brother share 5 lakh rupees. Now, just because we share the profits, are we the partners? No. That was just a property which was lying idle, and we got it and we are receiving the rent. Share of profit is there, but there is no business in it. Our business is not to give the property and rent. Our business is something we are doing. It is only extra property which is there, and we give it on a rental basis. That is why co-ownership is not part of the partnership. Co-ownership means you are holding one property with some other person. Ownership. Just because you share the profits there, it is not being involved there. Business is carried by all, or any one of them acting for all. Business is carried by all, or any one of them acting for all. The business, okay, either one can do the business or everybody can do the business. There is no problem. These are the elements of partnership. And the next 4 marks question they ask is this thing. Next 4 marks question they ask is this thing. So next important question that is asked in the examination is true test of partnership. They might directly ask this question. How do you find out that there is a partnership? What are the elements of true test of partnership? You have to mention that. True test of partnership means if these things are there, then only we tell that's a partnership. If these things are not complete, then no partnership. It is as good as almost similar to elements of partnership, but it is given in the summarized part. So, it determines whether a group of persons is or is not a firm, or whether a person is or not a partner in a firm. Regard shall be had to be real situation between the parties as shown by all the relevant facts together. Simply that just because two people are doing the business together, do they have a partnership or not? To decide that, we have to check these things. If it is proved, then there is a partnership. If these things are not proved, there is no partnership. There should be an agreement between all the partners concerned. See, it can be overall also. We are not doing that. What should be agreement? I put 10 lakh, you put 10 lakh, you put 10 lakh. We will share profits equally. That means there is an agreement. The agreement was to what? To share the profits of a business. There should be a business, there should be a profit. That profit sharing agreement should be there. And the business should be carried by all or any one of them, almost elements of the partnership. If you don't get this true test, write the elements. That is over. Now, very important one here is, this is again a 4 marks question. The last. Sharing of profit is very important, but just because you share the profits, it does not make itself in a partner. They'll ask what are the situations where you are not a partner after sharing the profits also. This is a situation. With the persons carrying on a business and particulars, the receipt of such share of payment are monies by a lender of money to person engaged or about to engage in business. For example, I want to start a business, so I went to a bank or lender. He told whatever the profit you make, pay me 10% of interest. Just because you pay the percentage of profit as an interest to the other party, it does not mean that he is a partner in that. He is just lender. He is in a situation of lender means loan provider, lender only. If you know it. Second, by a servant or agent as remuneration. Because if you know, the agent's remuneration is always a percentage of sales or percentage of profit. Trader commission, agent's commission in accounts, if you remember, consignment accounting. So just because agent share the profits, it doesn't mean that he is a partner. He is just an agent working for some remuneration. By a widow. Widow means what? Where the spouse is not there. It is not husband who lost the wife. Or wife who lost the husband. In both the cases, it applies. Widow means somebody lost their spouse. Or a child of a deceased partner as an annuity. What is this annuity? Per annum basis. So, what is per annum? Consider somebody is a partner. He died as a partner, but his wife or husband getting 10 lakh rupees or some percentage of the profits every year. That doesn't make the widow or child as a partner. By previous owner or a part owner of the business as considered for the sale of goodwill or share thereof does not itself make the receiver a partner with the persons carrying on the business. It is like I was doing a business, I was part of the business earlier. Last year I exited the business, but when I got exited, I just told them I don't want to be partner, but I just want 10% profits every year, whatever you make. Just because I receive a profit doesn't mean I am a partner. I don't have any relationship with the existing partner of a partnership. 4 people are not called as partners. Lender of the money by a person engaged in the business, servant or agent, widow or child of a deceased person, deceased partner, and previous owner, where a consideration of sale of goodwill is also not a partner. 4 points is important. 4 marks question. Then agency. Partnership always works on the agency. What do you mean by the word agency? Every partner is an agent of other partner. Every partner is an agent of other partnership firm. Every partner is a principal of other partners also. Agent and principal. Whatever the work you do, for which I am also liable. Whatever the work I do, for which you are also liable. We call it as agency. We call that specifically call it as mutual agency. That is me agent to non-agent. That is what mutual agency. Which is the cardinal principle. What is cardinal? Important principle of partnership law is very much helpful in reaching the conclusion in this regard. Now, sir, what do you mean by this mutual agency? Consider A, B, C. 3 partners are there. A is taking care of sales, B is taking care of purchase, C is taking care of finance in the firm. Now, as we tell mutual agency, A is an agent of B, A is an agent of C, B is an agent of A and C, C is an agent of A and B. Everybody is an agent of one another and principal of one another. Now, A sold the goods because of some bad market condition like COVID or something. The sales decreased because of which firm maintained the loss instead of profit. So, how much loss? 100 lakh rupees loss. Now, they actually done by A for the act done by A. Because other partners are also the agents, they are also liable for the A's loss. A's loss means firm's loss. So what ratio? It depends on their agreed ratio. 3:1 equal ratio, all those things. Each partner, okay. Here one more point I'd like to clarify. Okay, but here loss of 100 lakhs happened because of the fraud committed by A. That means purposely trying to cheat the other partners. Then for the entire loss of 100 lakhs, only A is liable. B and C are not liable. In the normal market situation, everybody is liable because of your not work their fault. But because of your fault, if something happens, then it is your fault specifically. Each partner carrying on the business is a principal as well as agent of other partners. So, act of one partner done on behalf of the firm binds all the partners. What do you mean by binds? Makes responsible. If the elements of mutual agency relationship exist between the parties, constituting the group formed with a view to earn profits by running a business. Partnership may be details. That's okay. Unimportant. Okay, actually there was a case, Santil and Dasgupta versus Dasran Manjul case, Supreme Court case, where something happened is like, in this case, the factors were weighed upon Supreme Court. That means they told, sir, we are partners. That's what I tell you, but the case is still going on the partners. To reach the conclusion that there is no partnership between the parties. What were the conclusions they reached? First, facts also submitted. Parties have not retained any record of the terms and conditions of partnership. That means partnership agreement, no proof is there. Sharing ratio is not there, capital control, nothing is there. No document is available. Even more than also they cannot pull it. Partnership business has maintained no accounts also on its own, which would be open to an inspection by both the parties. When there is no account, how can you tell that? How much money gone to which party? Is it sharing ratio? Not there. No account in partnership was opened with any bank. Bank account is also not there. No written information was conveyed to Deputy Director of Procurement with respect to newly created partnership. That means not registered. Nothing is there. When nothing is there, how can you tell there is a partnership? Because of all these factors, they concluded that there is no partnership between the parties. There is no partnership between the parties. This is the unit number 1, partnership. So it cannot be there. We will see this other partnership and joint stock company differences. See here, joint stock company is also called as company, normal company. It is also called as LLC, not LLP. As I told you one case, there was a difference between partnership and LLC. The question asked is, right? Some 7 differences between partnership and LLC. People thought examiner made some printing mistake, and they wrote as between partnership and LLP. LLP has been typing mistake as LLC. No, LLC means limited liability corporation. That is a company form of corporation. LLC means company. LLP means LLP specific. So, a firm is not a legal entity. That means you don't need to register also. But the company is a separate legal entity where, because of the registration, it will be coming into existence. Every partner is an agent of other partners as well as firm. But in case of company, nobody is an agent of firm. They just separate legal entity and everybody is separate. Member is not an agent of other members. Here, profits of the firm must be distributed among the partners. Look at the language, must be distributed. Here, completed, you have profit distributed over. But company, out of the total profit, they can distribute something by a dividend. They can retain something as retained earnings. That is up to the company. No mandatory 100% has to be distributed. Then the liability of the partners in case of firm is unlimited. But in case of here, it is liability of the shareholder is limited to the extent of unpaid up shares, if it is limited by shares, to the extent of amount agreed to be liable, that is guaranteed company, or member liabilities are limited in case of unlimited company. So the firm's property is called the joint estate. What is joint estate? Because firm is not a separate legal entity, it should be held in the name of all the partners together. But here, company is a separate legal entity. Property is also separate from that of members. So, a share in the partnership cannot be transferred without the consent of all the partners. Take the consent of all the partners, then you can transfer. But in case of public company, freely transferable. There is no condition. Only in case of private company, there is some restrictions. In case of a company, shareholders may transfer shares subject to some contains in article, that is private company. In case of a public company, which are listed, they can transfer with unrestricted, no restriction for transfer of shares. If there is no agreement between all the partners, all the partners will manage the business. Here, board of directors will manage the business. The directors will manage the business. No need to write the entire line. You can write two lines entire part. That is sufficient. Registration is not compulsory. A company cannot come into existence unless it is registered. It can be dissolved by the time we file the partners agree also. Here it has to be winding up by NCLT only, National Company Law Tribunal. You should go to the ROC or you should violate the objectives in case of secondary company, then only the closing of NCLT. Minimum and maximum is 2, maximum is 50. But here is 2 and 200 in case of private company and unlimited and 7 in case of public company, not less than 7 and may have any number of members maximum. But in case of OBC, only 1%. Duration it's up to the partners. Here it is perpetual succession in case of company. Partnership and club, we go through it. Club is like what? Association of people for the benefit of themselves. Gym club, gymkhana, Rotary club, Lions club, where there will be gym also, cricket ground also, there will be this badminton, shuttle, swimming, everything is there. You can go for events also will be happening. HUF anyway, see, only thing here is in case of partnership, you should be a major to become a partner. To be a part of partnership firm, you should be a major. But in case of HUF, by the birth only you will be a member of that. Because you don't need to wait till 18 years to take the birth. You will get, like, you will born, take birth first, then you will become 18 years. Not first become 18 years, then take a birth. No, not possible. So you will become joint family by the birth. Here it is. Death of a partner will lead to dissolution of partnership firm. Here does not lead to dissolution of family business because members, it is the nature of member that people will take birth and they will die after some time. Because of which you can't tell that there is no family. There is a family. Here all the partners are equally entitled for management of business. In case of HUF, only Karta is entitled for management of business. If the Karta is not there, then next senior most member in the family will take care of the business. Every partner can bind the act in respect to firm. Here only Karta or the manager of the HUF can bind the HUF. It is unlimited liability. Here no liability only for everybody. The liability is unlimited only for Karta. All the members of the family, no liability at all, unless until it is there. This is okay. There is Partnership Act 1932. Here it is Hindu law. Minor can be admitted only for benefits. Here they can become the member also. As per the contract, the firm will come to existence. Here, as per their continuity. That means if they decided no, we want to partition the family, then HUF comes to end. Number of members 50 here, maximum in case of partnership firm. In case of HUF, this is unlimited. That's why it comes as undivided family. When there is undivided family, you can have 200, 300 members also. Then partnership and co-ownership. Partnership should be either express or implied, but it should be arises out of a contract. Co-ownership means either by agreement or by operation of law. What is by agreement? A and B invested some money in one property. That is by agreement. What is by operation of law? A father died because of which the property came to A and B. That is by operation of law. It is by transfer or transmission. Anything can happen. There is an implied agency between the other partners here. A co-owner is not the agent of other co-owner. He was 50%, mine 50%. That's over. Then partners process association. Go through. Nothing like. See, three important differences are firm to LLP, LLP to company, firm to company. Very, very important. One question can come. But as I saw the trend of the examination, the difference between question highly asked in the first chapter, not first, second chapter, not third time. Difference between questions. One question generally comes, difference between that will be generally from first chapter. They can ask this also, not telling it will not be asked. Majority of the time they tested from the contract act. Now the next concept is kinds of partnership. Sir, what do you mean by kinds of partnership? How many types of partnerships are there? How many kinds of partnerships that you can create? There are 4 kinds of partnership. This is also important, the 4 marks question. If they ask with explanation, then you can be asked for 6 marks also. Kinds of partnership. There are 4 kinds of partnership. There are 4 kinds of partnership. One is at will, partnership at will. Partnership for a fixed period of time. Particular partnership, general partnership. First, let me take partnership, particular partnership. For example, me and your worship sir started an academy stating that we will give only coaching classes for CA students, CA foundation, CA intern. As our partnership is talking about what? Our partnership is particular. With what business you want to be there. That is what we are specifying. Whenever you do whatever you are going to do, that is what particular partnership. If me and worship decide, if the student comes for CA foundation, we will give CA foundation. If the student comes for CMA, we will give CMA class. If the student comes for ACCA, we will give ACCA. If the student comes for PUC, we will give. That means there is no fixed thing. That's why we call it general partnership. Where the purpose is not specified. Purpose specified, particular. Purpose not specified, general partnership. The particular and general based on the purpose. But when it comes to at will and fixed period, it is based on time period. One is based on the purpose, one is based on time period. So when I say partnership for a fixed period of time, me and Rashid decided, oh yes, we are going to go now in India. Next year I will go out of India. He also told I will also go out of India. For 1 year, we will give the classes for CA foundation. So partnership for a fixed period. Whenever you decide, okay, we will do business only for this much period, 1 year, 2 year, 3 year, 10 year, 100 years also. But the moment you specify the years, months, days, it is partnership for a fixed period of time. What is partnership at will? What is will? Will is what? Whatever we wish, we will do it. That's what will. There are 2 points that to be understood. Out of 4, this is again much more important. Much more important. As a partner, you have not decided till how much period you will do the business. First point. Or as a partner, you have not decided when will you close your business. No, what is provision made for determination. Here it is there. No fixed period has been agreed upon. That means no period is how much period. As well as there is no provision made for determination. Determination means closing of the partnership. You did not make any decision with respect to when you want to close the partnership. Both are not decided. Then we call it as partnership at will. Now, this is one extra point. Consider this part. Partnership for fixed period. We agreed. Me, Veeraj and Rashid agreed that we will do business for 1 year. But because of some non-availability of visa, both did not go outside India. So we told, okay, it will take 1 more year to get the visa. So we'll continue the business. Now we agreed for 1 year. After 1 year, we did not change our agreement. We just continued our business. I mean, we have a good relationship, then we just continue. In that case, what happens is, the moment I complete 1 year, fixed period is over. Now we are continuing as per our wish. Because of which, after 1 year, it will be called as partnership at goodwill. Whenever the partners continue their partnership business, after the expiry of a fixed period that they fixed, the partnership will be called as partnership at will. Partnership will be called as partnership at will. Somebody texted and again they did online. What did you tell? This is the same point. So here, if you say, where a partnership entered into a fixed term, continued after the expiry of such term, it is to be treated as having partnership become active. That means old partnership completed, you entered a new partnership active. Then fixed period, very simple. Where the duration of the partnership is fixed is called as fixed period. Particular partnership, either it is organized for single adventure, that means one purpose, or for conduct of a continuous business, one or more purpose, but purpose is specified. What is general partnership? Where? With respect to business in general, which business we don't know, any business can be there. Business in general. Today I can do classes, tomorrow we will do hotel, next day we will do construction, anything, it doesn't matter. If you do it, that is called as general partnership. Now, one very important, again 6 marks or 5 marks question I can ask is this partnership deed. So what is partnership deed? It is an agreement between all the partners. You tell me without reading that, if you decide to enter into partnership with one of the partner, what should be there in your agreement? What contents has been removed to remove there? Name of the partnership form should be there. What is the name you are operating? Then name of the partner should be there. Then if there is an office, address should be there. Business. What type of business you want to do? That adventure has to be given. Then capital contribution, profit sharing ratio. When did you commence? If you want to admit somebody, what is the procedure? If you want to remove somebody, if you want to go outside that retirement, if you want to throw somebody out, all those things have to be in the partnership from partnership deed. That is what it is there. If you don't read also, just read it on general. That is sufficient. So partnership is a result of agreement, which says it should be at times name of the firm, names of all the partners, nature of business, place of business of a firm. When did you commence the partnership firm? If it is a fixed period, what is the duration? 2 years, 3 years, has to be there. Capital contribution, PSR, admission, retirement. This is we did not discuss, but it should be there. If there is extra capital on the capital level, what is the interest and capital grants, loans, etc. Provisions for settlement of accounts in case of dissolution of the firm. How do you settle? Will you people will decide? Will you go to the court? How do you do it? How much salary will take? Commission will take the partners are. How do you throw somebody out? Expulsion. Expulsion means sending out, throwing out. These are the things which are should be the contents of partnership deed. Very important. They test it. Either the test, as far as I remember, 2 tests of partnership are the test. This partnership deed are the test types of partnership. Or one more thing, they might test this types of partners. Maybe. This is very rare. 2 marks question they can ask, but this is very rare. What are the types of partners? There are many types of partners. First type of partner is an active or ostensible partner. Who is an active partner? Active partner is a partner who is actively taking part in conduct of business. Either he is doing one or the other thing, but he is there in the business. You know in and out of the business. What is happening here? What is sleeping partner? We just become a partner He invested the money, but he don't want to take part in the business conduct part. That is like a sleeping partner. He just sleeps, get the profit, incurs the loss, that's all. But management of the business. See, whether you are an active or sleeping, decided by whether you are actively involved in the business or not. If you are a partner involved, active partner. If you are a partner not involved, sleeping partner. Then nominal partner. Nominal partner is a partner who just gives his name to the partnership. Name to the partnership. Then incoming partner. Who is an incoming partner? Admission partner. See, whenever you want to start a partnership firm, 3 people agree to join the partnership firm. Is it incoming partner? No. Existing firm, somebody should get appointed. That is what we call as admission. Creation of the firm is not called as admission. What is retirement? The outgoing partner. From the existing firm, we should go out. That is what we call as outgoing partner. So active, nominal, outgoing, sleeping, incoming, global. Partners in profits only. What is partners in profits only? Only sharing profits. You call me only for food, not for what is customer problems. Okay, that English translation was not good. We will agree that I get only the profits. If there is losses, don't call me only. I don't know you, you don't know me. In case of losses. But if you are in profits, we are like relatives. Whenever we are good, yes, you are my brother, you are my sister, you are my uncle, aunt, everything welcome. But when you are in a downfall, no, I don't know. He is far relative. We just had some, met 1 or 2 times, that's it. That is what partners in profit only. Then sub-partner. What is sub-partner? Partner's partner is sub-partner. Whenever the partner transfers his interest to somebody else, the transferee will become a sub-partner. And important point here is partner by holding company. If you remember, partner by holding company, I gave a classic example in the class. Mukesh Ambani, MA. Mukesh Ambani, MA means Mukesh Ambani. So it is not a Kannada word, it is an English abbreviation. Consider 3 partners are there, they are sitting at some place, some meeting has happening, and we call the Mukesh Ambani as a chief guest. And in the meeting, bank people also come, creditors has come, everybody has come. Now what happened is, one of the partner told that Mukesh Ambani is my partner. What should Mukesh Ambani do? Mukesh Ambani actually denied, no, I'm not his partner. He is having no relationship. I just came here just because they told that the food will be good. I came here, I'll sit for the meeting and I'll go out. That's what my purpose. If we had done this, then there is no relationship, there is no liability. What when you tell it, and Mukesh Ambani felt very happy. Oh, somebody treating me as partner. Then he kept quiet. Because of which happened, thinking that Mukesh Ambani is also partner, all the bankers gave the money. Later, partners could not repay, then bankers went to Mukesh Ambani. Now Mukesh Ambani is telling, no, I don't have any relationship, but it doesn't matter because when somebody represented you as a partner, you had an option to deny, but you did not deny. You stopped yourself from denying that. Because of which you will be called as partner by holding out. You are an outside person, but you will be still called as partner. This is partner by holding out. See here, it can be other case also. Partners told Mukesh Ambani is my partner. That's okay. Mukesh Ambani only told I am the partner in this firm. Partners should have rejected, but partners also kept quiet. That case is also possible. Other party is not denied. That is what the important part is. That is partner by holding out. This is the first unit, which is from Partnership Act 19. Which year? 1897, 1872. 1930. Okay. This is Partnership Act 1932, unit number 1. See, the question is, will the general partnership become partnership at will? No. Why it will not become is general partnership is based on the purpose of partnership. what purpose you have established. If there is no purpose and or if there are many purposes, then we call it general partnership. But what is partnership at will? Partnership at will is based on the duration, not based on the business or purpose. If you continue to do business for 1 year, 2 years, 3 years without telling that I do for so much of period, we call it partnership at will. General partnership is based on the purpose or nature of business they do. Partnership at will is based on duration of the partnership. Where there is no duration is fixed, that is general partnership at will. Where there is no purpose is specified, that is general partnership. That's the difference between two things. About the understood? Okay, we'll take a break. See you after the break. We'll continue. Unit number 2, relations of partners. So relations of partners are how one partner is related to other partner. So one important topic is general duties of partners. What are the general duties of partners? The partner should carry business of the firm. What do we mean by the firm? In the firm in which they are partners, that firm's business, to the greatest common advantage. This is the first duty. We should carry out the business to the greatest common advantage of the partnership firm. So, what do we mean by greatest common advantage? So, look at the language. What is advantage? Something benefiting the firm. What is greatest? More benefit. What is common? Common is nothing but the benefit should be there for everyone. It is not like you sell something in a black market, make profit for yourself. No, that is not what it is meant as advantage. It is greatest common advantage. You should always accommodate for partnership account.
Means profit.
Yeah, profit. But you don't make secret profit.
Huge profit.
Try to maximize the profits. Greatest advantage means maximum profit. Common means everybody's advantage, not your own advantage. It is like you should not make like because you are a salesperson, you are sales in charge. You can't tell the buyer, other party, see, I will sell the commodity, actual price of the commodity is 100. I will sell at 50 rupees. There is 50 rupees difference. Give me 30 rupees separately. That you should not do it. Try to bring every amount of money into the partnership so that everybody can distribute it. That is called the greatest common advantage. And second one, second duty is they should render to any partner or his legal representatives full information of all the things affecting the firm. Render the complete information. Second duty, render the complete information. That means whenever somebody asks what is last month's sales, last year's sales, where did money go, you should do complete information. Then you should have utmost good faith in his dealings with the other partners. What do you mean by good faith? You should try to be honest. Don't try to cheat anybody. Honestly, this is the third general duty. We ask question. What are the general duties of the partners? Carry out the business of the firm to the greatest common advantage. Render to any partner all his legal representative full information that is affecting the firm. Third one, act in utmost good faith with respect to all the other partners. Three duties are there. The next section says duty to indemnify for loss caused by fraud. Yeah, see, there are three partners, A, B, and C, and A committed some fraud because of which there is some 10 lakh rupees loss occurred to the firm. Now, if this 10 lakh rupees of loss is general nature, then everybody would have borne. Now, 10 lakh rupees also should be borne by consider equal ratio 1:1:1. But is it the mistake of B and C? No, when it is a fraud, it is only a mistake of A. You should reimburse the B as well as C. Indemnify. Indemnify means reimburse or make good the loss. Make good loss. You should, if because of your fraud, if there is any loss occurring to the firm means other partners put together, you have to reimburse them. Then determination of rights and duties of partners by contract between the partners. What do you mean by determination of rights and duties of partners by contract? Who is responsible for what? Is decided by agreement. Contract. Whatever they contract, whatever they agree between themselves, that is what their responsibility. Sales, purchase, finance, etc. etc. So, subject to the provisions of Act, mutual rights and duties of the partners of a firm may be determined by contract between the partners. By contract between the partners. And such contract may be express also or may be implied also. What is implied? Express is I'm telling, okay, sales, purchase, finance. That is what we only allocated. That is express. What is implied? Huh? Yeah, they did not they never spoke about, okay, you do this, but one party took one area of doing the work. And everybody was still silent. That means it is implied in the agree about it. Then this is important. Actually, this concept is section 27 of Indian Contract Act concept. Agreements in the restraint of trade. What do you mean by restraint? Restrict. So what do you mean by agreement in restraint of trade? Consider when somebody there in a partnership firm, you are telling them don't do any similar business. Either now or after you leave the partnership firm also. Is it valid? Generally, contract act says, when we go to the next chapter, contract act, we will discuss that. It says, if three conditions are fulfilled, then it is valid. If three conditions are not fulfilled, then it is not valid. So, what are those three conditions? One party, like consider I am telling you don't do the business, I am trying to restrict your business, then you should have sold your goodwill to me. Sale of goodwill should happen. And whatever the condition I put, the condition should be for a limited amount of time, for example 1 year, 2 years, 3 years, specified amount of time, and a specified geographical location. You can't do the business in Karnataka, Bangalore. You can't tell that you can't do business anywhere in the world. No, that is not right. You have to limit the scope, limit the time, limit the scope, sale of goodwill. All the three things are there, then you can restrict. If not, you can't restrict. So 27 of ICAI 1872. Such contracts may provide that partners shall not carry on any business other than that of the firm while he is a partner. Okay, while he is a partner, you can put any condition. For example, because I am teaching in this academy, they can tell while you are teaching here, you can't teach anywhere else. That is possible. But after I leave the employment or after I leave this teaching also, they can't put some restriction. If they want to put the three conditions have to be satisfied post employment. During the employment, anyway, it is there. Conduct of business, how the business has to be conducted. every partner has a right to take part in the conduct of business. Yes, unless until you specify who is responsible for what, everybody has a right to take part in the business. Every partner is bound to attend diligently to his duties in the conduct of business. So, what is his duties? If it is divided, the divided part is your duty. If it is not divided, then entire thing is your duty. Any differences arising as to ordinary matters connected with the business may be decided by majority of the partner. This is again important. See, in the any differences arising to the ordinary matters connected with the business. For example, as I told, me and Roshni is a partnership, partnership firm. Now we are doing CA coaching. Coaching we are giving which course we are giving the CA course coaching. CA in the final foundation. Now I am telling to Wasim, consider three partners, one more partner, 1, 2, 3. I am telling to everybody. We will even extend it to CMA also. We will even extend it to CS also, ACC also. Now, whenever any matter there with respect to connected part, what is connected, coaching business only is connected, then it should be decided by majority of the partners. 2 out of 3 has to approve. Similar business. But if it is, change in the nature of business. What is nature of business? We are into coaching. Now we decided to get into construction. Later we decided to get into food industry. That means nature itself is changing. Then you should get consent of all the partners. Same business, extended, contracted, majority. Different business altogether, then all the partners' consent should be required. Now, why it is important? Consider we decided to do the coaching center. This is particular partnership. So specified particulars. Now again we want to add one more separate kind of thing. That means we will leave this coaching and we will enter into some other thing. Or we will have a coaching and we will do even food business also. Okay. The new thing is also a particular partnership that because the purpose is particular. I am telling coaching and food. I am not telling anything whatever it is there. Particular means specified purpose. Then right to take part in the conduct of business. Every partner has a right to take part in the business of the firm. This is because partnership business is a business of partners. Unless until it is there, everybody has a right to take part in the business. The right to be consulted. What do you mean the right to be consulted? Consult means what? Ask. Whenever there is any conflict going on in the firm, for example, 10 partners are there, 2 partners are fighting. If they want to get a solution for that, they can go and consult other partners. If they feel other partners are also not capable, they can go and consult some outsiders, very specialized persons. So, where any difference arises between the partners with regard to the business of the firm, it shall be determined by views of a majority of them. And every partner shall have a right to express his opinion before the matter is decided. But no change in the business is to be of the firm made without the consent of other partners. Same part. This means that in routine matters, opinion of the majority of the partners will prevail, who are acting in a good faith, and every partner must be consulted as far as practical. That means you should ask everybody: should we do this? Should we not do this? Then again, right to access books. If somebody want to check what was happening in the last month, last year, last quarter, yes, everybody has a right to go and check those books of accounts. The right of legal heirs, representatives are their duty, authorized agents, duly authorized agents. What is the right of legal heirs? Consider partner is their partner right. They can receive the share of profit, they can receive the share of assets also, whatever it is there. That's it. But they can't be part of taking part in the business. In the event of death of a partner, his heir or legal representative or duly authorized agents shall have a right to access to books of accounts and to inspect and copy of any of the firm, but they can't intervene in the business of the firm. You want to check everything, you can check. Only on the death. It is only upon the death. This is also again important. Mutual rights and liabilities. So, what are the mutual rights and liabilities of partner? That means what is the right I have on you? What is the liability you have on me? That is what mutual rights and liability. So your partner is not entitled to receive remuneration. Here one very important line is there. Subjected to contract between the partners. What do you mean by subjected to contract between the partners? As per the partnership deed, whatever they agree, we will give effect to it. If there is no agreeing between the partners, then these are the things which will prevail. If the partnership deed something, say something, follow that. If the partnership deed is silent, follow this. A partner is not entitled to receive any remuneration for taking part in the conduct of business. If you want to take the salary, enter it in the partnership deed. Every partner will get 30,000 per month, 20,000 per month salary. Then you take the salary. If the partnership deed is silent, then you don't get any salary. If the partnership deed is not consistent, the partners are entitled to share equally the profits earned as well as contribute equally to the losses sustained by the firm. If you want to have 3:2:1, 5:4:8, etc., you try to enter an agreement. If you don't enter anything, then your profits are equal ratios. Where a partner is entitled to interest upon capital subscribed by him, then such interest will be payable only out of the profits. See, interest on capital basis. What is interest on capital? They have taken, consider 5:3:2 ratio, ABC. A contributed 5 lakh, B contributed 3 lakh, C contributed 2 lakh. Now it is the correct capital. Now if you want to take interest on this in capital, then you can take only when there is profit. If the firm is in the losses, then you can't take the interest on capital. But now A should contribute 5 lakh. Instead of 5 lakh, they contributed 7 lakh. Out of 7 lakh, 2 lakh rupees is what? Loan or advancement to the firm. Remaining 5 lakh is normal capital with respect to the sharing ratio. Now this 2 lakh is called as advance. On that advance, can you take the interest? On that it is available. How much? Maximum of 6% unless until it is allowed by agreement. So, for the purpose of business, any payment or advance beyond the amount of capital, that means you are supposed to give 5, but you give 7, extra 2, is agreed to subscribe, is entitled to interest thereon at the rate of 6% per annum. But here again, subjected to contract. Contract says something, that's okay. If not, 6%. And the firm also shall indemnify a partner in respect of a payment made and liabilities incurred by him in the ordinary and proper conduct of the business. That means, whenever I did the firm's work in a regular course, I incur my expenses, my own money for expenses. It is a duty of the firm to give that back to me. That is, indemnify the partner to any expenses incurred by the partner. Or in doing such act in an emergency for the purpose of protecting the firm from loss. This is important. In protecting the firm. For example, I will give the example. I am in charge for classroom. That fire extinguisher example in the class we given. Same example. I am responsible for conducting the class. One more partner is responsible for maintenance of the building. But that partner is not there. They went somewhere. There was a fire which was occurred in the building. So I went down and got the fire extinguisher for 5,000 and I spent it. Now the other partner cannot tell that, no, you don't have the authority to maintain the building. You should just take the class. They can't tell it because if the fire was not ended or this taken off, fire is not taken off, then it could even consume the entire building only, end of the building. So I'm trying to protect the firm from the loss, because of which I am entitled for all the money which I incurred in protecting the firm from loss, provided as would be done by a person of ordinary prudence. If it was your own thing, how would you do it? You have to do it in the same way. For example, somebody like after we had a function here, after that lighting of lamp, this matches is there and somebody thrown. Still it is burning. What a normal person will do? step on it, that's over. But you went down, brought again 5,005 distribution, and you what nonsense. This is not acceptable. That is not called as emergency. You would have not done it in your own case. So those things are not allowed. Only to protect the firm from the loss as a matter of artificial prudence, then those things are allowed. And then if there is any willful and purposeful, then partners shall indemnify the firm. Also again the loss item. They'll ask mutual rights and liabilities. Subjected to contract between the partners, not entitled to any remuneration of salary, entitled to share the profits or losses equally. Then no interest on capital, 6% interest on advance, and what is firm shall indemnify the partner for any expenses or cost incurred by him on behalf of the firm, and to protect the firm from loss any expenses incurred as a matter of ordinary prudence. These are the mutual rights and liabilities. One more thing is, if because of you, if the firm is incurring some losses, then firm has to reimburse that back to the partner. These are the 6, 3, 4, 5, 6. 1, 2, 3, 4, 5, and 6. 6 mutual rights and liabilities of the partners. Then again, right to remuneration. What is right to remuneration? Salary. Any partner eligible to or entitled to get the salary? If the agreement says, then yes. If the agreement says nothing, or if agreement says no, then no salary. How much is the salary? I think I discussed in class. Up to 3 lakh, more than 3 lakh. How much it is? 90% of profit, 60% of profit, plus 2.7 lakh. Plus 9 3 is 27, 2.7 lakh plus 60% of the balance profit in excess of 3 lakh. In excess of 3 lakh. The right to share profits. How do they share the profits? Agreement says something. As per agreement, if agreement says nothing, equal ratio. Everyone is entitled to equal losses as well as profits. Interest on capital, all those points are explained here. No interest on capital if there is no profits. Only interest will be allowed only in case of profits. So the following elements must be there before the partner is entitled to interest on money brought by him, that is capital. An express agreement to that effect, or particular practice of partnership should be there, or any trade customs to that effect, or statutory provision. Either you should agree between the partners that we will give the interest on profit, on capital when there is profit, or generally there is a custom in your business continuously interest will be given, or the law itself says that you will get interest or something. Under those situations only you will get interest. If not, no interest. If it is an advance, what is advance? Contribution by partner in excess of capital. In excess of capital, that is advance. How much? Generally 6% per annum. If they want, they can agree into extra percentage in the agreement, they can get it. Then the right to be indemnified. Now, any partner incurred any expenses on behalf of the firm, that should be indemnified for the partner by the firm, or to protect the firm from the losses, then also it is allowed. Or right to indemnify the firm. If you do any mistake by your end as a partner, you should indemnify the partnership firm for those losses. These are the mutual rights and liabilities of a partner. Mutual rights and liabilities of partner. Then comes partnership property. What is partnership property? Property are assets or some value they have. When I say partnership property, there are only three things which are called as partnership property. ಅದು ಆಸ್ತಿ ಅಂತ ಏನಾದ್ರು ಇದ್ರೆ ಅದು ಮೂರು ಐಟಮ್ ಅಷ್ಟೇ. So what are those three things? Whenever partner became the partner, they got some capital contribution, that capital. While doing the business, if they acquire any assets, that is also property of the partnership firm. And if there is any goodwill generated by the firm because of the good brand value, that is a third part. Capital, initial capital contribution, assets acquired during the firm, and goodwill generated in the so property of the firm is partnership assets, property, joint stock, common stock, joint estate, etc. So it comprises of the following items directly. All property rights interest which partners may have brought into the common stock as a contribution of the common business. See, I told the wrong word. Capital contribution, okay, but need not be always in cash. Capital contribution can be like, okay, I bring one car to the firm instead of money. Yes, that is also a capital contribution. Instead of which I do my building, that is also a capital contribution. Capital can be money or cash, anything there. If you bring anything into the partnership's property, that is partnership's property. As well as all the property rights interest acquired by or for firm for the purpose and in the course of business of the firm. That means assets purchased. Assets, tangible or intangible, purchased. During business. Then goodwill of the business. Three things put together become as partnerships property. Then what is goodwill? Goodwill is something which is intangible, value of a brand, etc. You can't define it, but it is a reputation which can't be seen and tested, but there is some value for it. I don't want to read. Okay. Property of the partner. What is property of the partner? Consider I am a partnership, I am partnering ABC partnership firm, and my part of the contribution is 2 lakhs. I contributed 2 lakhs. After the contribution, I have 2 cars, my personal one. I have 2 houses. I have 1 extra land. All those things are also partnership property. No, they are my property. So when I say property of partner, that is separate with respect to the firm's property. Exclusively belonging to a person. It does not become a property of partnership merely because it is used for business of the partnership. For example, if you know that water example, I came to the academy on my scooter. Academy scooter was in repair. So academic people asked, please give the scooter, we will bring the water. So just because they use it for academic purpose, it does not mean that that will become academic property. That is still my property. Application of the property of the firm. How do you use the property of the firm? You should use only for firm's business, not for your personal thing. You should use it for only firm's business. It shall be held and used exclusively for the purpose of firm. This is also important. 3 marks question like this. Personal profit earned by the partner. What is personal profit earned by the partner? You will know that 100 rupees product I sold it for 50, I received 30 rupees separately, just now I give. If you make 30 rupees profit, that 30 rupees you should bring it to the firm, give it to the firm, account it in the firm. If a partner derives any profit for himself from any transaction of the firm, or from the use of property or business connection of the firm, or the firm name, he shall account the firm's property then profit and pay into the firm. For example, I think what example I gave in the main class? Third example. One of the partner actually supposed to go and bring the books from one printing agency which was there some 10 kilometers away. While he was going, he immediately switched on the Rapido motor and started driving there for rental. So he earned some 2000. Then while he is coming, he took the books and came back. Now he made a 2000 profit using the firm's car. He should give that 2000 rupees as a sales to the firm, other rental. Or if he carries any business which are same nature or competing, you are a partner of this academic classes. Again, you open your own more academy also. Because of which students are not coming there, students are coming there. There is a loss. Whatever the profit you make there, you put it directly back to this main partnership firm. He shall account for and pay to the firm all the profits made by him in the business. This is saying there is nothing to discuss. What are the rights and duties of the partner when there is a change in firm? What do you mean when there is a change in firm? If there is any, see again, subject to contract between the partners, if they don't change anything expressly, after changing the firm, after expiry of the term of the firm, for example, there are A, B, C earlier, now A, B, X or A, B, C they are there. Whatever the earlier rights there for A, B, C still rights also same. Somebody died, somebody retired, etc. Doesn't matter. After expiry of the term of the firm, for example, you did the business for 2 years. Now 2 years completed, you will get to third year. Whatever the rights there in this 2 years, same rights will continue for the third, fourth, continuous year also. Where additional undertaking is carried out. What is additional undertaking? Along with the CA, you started CMA classes also. Now whatever the rights and liability sharing of profit is there in CA, same rights and liability will continue for CMA also. When there is no contract between the partners. If there is any contract between the partners, as per the new contract. If not, existing taking. Just go through it a bit. I drink my water, hot water. So next one is, see that. The relations of partners to third parties. How every partner is related to a third party. Partner to be an agent of the firm. When partner is the agent of the firm, any act done by the partner in the firm, with the third parties on behalf of the firm is responsible. How can make the firm responsible for everything? Yes. If it is conducted in the ordinary course of business. If he does anything outside the scope of business, then he can't make the firm responsible. So it says that partner is an agent of the firm for the purpose of business of the firm, for the purpose of conducting a business. The partner indeed virtually embraces the character of both principal as well as agent. So, for as he acts for himself and his own interest in the common concern of the partnership, he may properly be deemed a principal, and so far for the acts of the partner, he may properly deemed as an agent. Simply I try to tell, if you do it within the authority, you are an agent also, you are a principal also, for which the other partners and firm is also liable.
Partner indeed virtually embraces it.
Partner
Partner indeed actually engages character of principal agreement.
means he embraces means he shows or he looks like having a both character, principal as well as agent, depending on the situation. Embraces means he wears it, kind of thing. His agent also, his principal also, depends on the situation. If he is working, then he will be agent. If somebody is working, then he will be principal. Some other partner is working. This is again 7 marks important question. Mainly this question specifically. Implied authority of a partner as an agent of the firm. So what is implied authority? Other than express. Everything which is words written, spoken is called as express authority. You can do this, that is express. What is implied? Implied means even without talking, even without writing, if you do some activities, it is called as implied. Now every partner does not have every implied and express authority, but however, any partner don't have implied authority with respect to the following points. You can't assume that I have the authority and do these activities. Not possible. You should specifically get the authority, then only you can do these activities. So what are those activities which has to be compulsorily needed? In the absence of usage, customs, trade or contrary, the implied authority of a partner does not empower him to, that means he cannot do these things. What those things? First one is submit a dispute relating to the business of the firm to arbitration. Submit a dispute relating to business of the firm without asking or without the permission of all the other partners. So you can't directly go to arbitrator. What is arbitrator? Out of the court settlement. You can't submit it to arbitrator. Or you can't open a bank account on behalf of the firm in your own name, telling that this bank account itself is also firm's bank account. If you get any money, please transfer it to this account. If you want to open it, you should get the authority from all the partners, then only you can open it. See, here the point is, you can't open a bank account on behalf of the firm in your own name. Can you open a bank account on behalf of the firm in the firm's name? Yes, it is possible. You don't need any special permission because firm's account is firm's account. You can't use it for your own personal purpose. You can't go for compromise or relinquish any claim or portion of claim by the firm. What is compromise or relinquish? Relinquish means bit kodal. What do you call it as relinquish?
Giving up.
Huh?
Giving up.
Giving up, not exact. The word is not giving up. Extinguishment. Living up. Giving up is only that is compromise or relinquish any claim or portion of the claim. For example, there is a court case going on. We suffered some loss because of which there is a chance that court can punish the other party and give us 10 crore rupees. You can't go to the other party indirectly, telling that I am partner of the firm and take 5 crore rupees and come back. No. You can't compromise or relinquish with respect to any claim or part of the claims by the firm. It is the firm will take care of it. You cannot withdraw a suit or proceedings filed on behalf of the firm. If the firm has filed a complaint on somebody, as a partner you can't go and withdraw the case. The case has to be withdrawn by all the partners together. That you should get the authority, then you will be able to withdraw it. Or you can't admit any liability in a suit or proceedings against the firm. That means consider judge, there was a case going on. We went on behalf of the firm. But firm told, don't admit anything, nothing. Because somebody provoked you. You started telling, yes, we only did. What can you do? Tell me. What the hell can you do? Yes, I did it. You can't admit these things. That is totally wrong. In many movies, they do it. Like rich kids will be there, then a liar will provoke them, because of which they start abusing in the court itself. Or they cannot acquire immobile property on behalf of the firm. What is acquire? Purchase. Or they can't sell also, transfer. Immobile property belongs to a firm. They can't acquire the property, they can't sell the property also. Or they can't enter into any partnership on behalf of the firm. Yes, I'll be partner of other firm. I'll sign on behalf of the firm. You can't do these activities. Implied authority. It is very important. You should remember all the points. You can't submit. You don't have power to submit dispute to arbitrators. Can't open bank account on the behalf of the firm in your own name. Then you can't compromise or relinquish. You can't withdraw a suit. You can't acquire a property. You can't sell a property. You can't transfer, enter into partnership on behalf of the firm. These are the works which can be done with implied authority. It has to be done with the express authority only. Implied authority is not possible at all for these things. Once go through it first. Important. Okay, what are you doing there? You want to? Huh?
Please bring a message.
How are you? These are implied authorities. You have to go through it. Once go through it, you get 2 minutes. Next point. Mode of doing the act to bind the firm. If you do the act of the firm, if you do act in such a way so that you can bind the firm, what type of act are there? If you do the act using these 3 conditions, then it will automatically bind the firm. So what are those 3 points? The act, whatever you do, must relate to the usual business of the firm. That means, if we are in the coaching business, CA coaching business, then you should do something which is related to CA coaching. For example, purchase of books, purchase of laptop, or purchasing the cloud storage, etc. But if you enter into any agreement to construct a road, that will not go in the firm because firm's business itself is not there. You should enter into such act which is the firm is in the usual course of the business. You know it is there. And the act which is done must be within the scope of authority and related to the normal course of business. That should be within your authority and firm should do the business. The first point. The second point is the act which is done for normal conduct of business of the firm. The usual way of carrying on the business will depend upon the nature of the conduct. That means you have to conduct the act in such a way that how the normal conduct of business of the firm happens. For example, if we generally do offline coaching, you also should enter into some conduct with respect to offline coaching. If you do something online, which is not the normal course, then you can't make the firm liable for all those activities. It should be the normal course of business. And the act to be done in the same manner, in the name of the firm, or in the other manner, expressing or implying an intention to bind the firm. Whatever you do, you should do it in firm name. If you do it on your own name, or if you do it on somebody else's name, then you can't bind the firm. Any activity you enter that should relate to the usual course of business in the normal conduct of the business of firm, and it should be the name of the firm. 3 points should be there. Again, 3 marks question. When a firm partner can bind the firm, these 3 situations. This is also important. They must 3 marks. Extension and restrictions of partners implied authority. There are only 2 points here. What is extension and restriction? Earlier, somebody doing sales, that is implied. Now you decided you will not be in charge of sales. As other partner, you decided you will not be in charge of sales. Now, whenever you do it, after which also he goes to some third party, buys the goods in the name of the firm on credit basis. Then what happens in this case? Whenever you already restricted implied authority, can you do those activities or not? Now, is the firm liable or not is the main question. We tell firm is not liable. Firm is not liable under 2 situations. Under 2 situations. What are those 2 situations? First one, the third party knows about the restriction. That means third party knows that he's been already taken the power of sales. But still you enter the transaction. That means it is your own risk because you already know, but you still enter the contract. It is not. I will not be responsible. You will take care of those people. I don't care. You whatever you want to do, you do it with them. That's the first part. And second part says the third party does not know that he is dealing with the partner of the firm. That means third party does not know that he is a partner of firm only. Third party knows that thinks that he is an individual person. When you don't know that he is a partner, how can you hold the firm liable for this? Either you know the restriction, still enter the transaction, it is your own fate, you have to take care. Or you don't know that he is a partner, still you enter the transaction, then firm is not liable. Under 2 situations, firm is not liable. Whenever there is an implied authority has been extended or restricted. This is same. Partner's authority in case of emergency, he can do anything to protect the firm from the losses as a man of ordinary prudence. That is, he can do. Now, effect of admission of a partner. Whenever partner gets admitted, then what is the effect? So here this one, one more point is the request for admission. Here is the introduction of new partner. Please, what is the effect of admission? Effect of admission is whatever the liabilities are there till today, for which he is not liable, for all the future liabilities he will be liable. but he wants to be liable for all the existing liabilities also, he can be liable. It is up to him. And he will get the new sharing ratio, all those things will happen. Effect of admission. This is, if MCQ was there, this would have been sufficient. I have then asked 2 marks question. Effect of notice to acting partner. There can be multiple partners, active, sleeping, incoming, outgoing, etc. Whenever you give any notice to active partner, it is as good as you give it to everybody. Does not notice, effect of notice to active partner. One partner, you give the notice, every partner got the notice. That is what it is there. But if you give the notice to a sleeping partner, it is not as good as given to every partner. You have to give it to every partner separately. Because active partner is actively taking part in the business and he will be in charge of those things. If the notice to one is equivalent to the notice to the rest of the partners of the firm, that is notice to active partners. This one is again 4 marks question they asked. Rights of transfer of a partner's interest. A is a partner in the firm. He sold his share to person X. Now he is a transferor. He is a transferee. He is a transferee. Now, what are the rights of this X? That is what we are discussing. Transfer. Rights of a transferee of a partner's interest. Now, what he can do, if you ask me simply, he can go to partnership. He can get his share of profit. That's it. He can never question accounts. He can never interfere into the business. Nothing. He can just go get the share of profits. Or when the firm is closing down, get the share of assets. That's it. Nothing else. His share in the partnership is transferable as other property. But as the partnership relationship based on a mutual confidence, an assignee of partners' interest by sale, mortgage, otherwise, cannot enjoy the same rights and privileges as the original partner. So, what rights he cannot get, he is not entitled to interfere with the conduct of business. Even if he is getting right also, they can ignore him also. Or he can't require ask the books accounts, or he can't inspect the books of accounts. Nothing is allowed for him. Then what he is allowed? He is only entitled to receive the share of profits of the transferring partner and is bound to accept the profits as agreed by the partners. That is, he cannot challenge the accounts also. Even though he knows that profit can be 20 lakhs, but actually they tell only 10 lakhs actual profit. Then he can't even question, no, I thought it is 20, no, nothing, nonsense. 10 lakhs will be your share, you get the profit. On the dissolution of the firm, the retirement of transferring partner, the transferring will be entitled against the remaining partners. That means he will get share of assets. Share of assets. Now again very important concept. One question I am expecting compulsorily from this. A 7 marks question can, 7 or 6 marks question can come in. This minor related part, minor part. Can a firm appoint minor as a partner? Firm cannot appoint any minor as a partner of the partnership firm. However, it can appoint somebody, some minor as for the benefits of partnership firm, only for the benefits of partnership firm, with the consent of all the existing parties. With the consent of all the existing partners. If this is happening, now We'll discuss some parts. If the firm makes some profit, is minor is also eligible entitled to get the profit? Yes, his share of profit will get. If there is a loss in the firm, then whatever the profit he already earned, the loss will be limited to that profit share. He can get the share of profit only after his retirement, only after he is going out of the firm. Now, when he has a minor, he admitted for the benefits of the firm. The moment he becomes major, I started as a minor. I'm 17 years I started. 1 year is completed now. Now I became 18. Will I be called as partner immediately? No. The moment a minor attains a majority, the minor becomes a major, then he has two options. He can choose to become a partner. He can choose not to become a partner. Whenever he chooses to become a partner, of a firm after attaining a majority, you should, as a minor, give the notice to the firm stating that yes, I am ready to become a partner. Within 6 months from the date of attaining the majority. If you don't want to become a partner also, within 6 months only you have to give the notice to the firm stating that I don't want to become a partner. If you want to become, yes, give it. If you don't want to become, yes, then also give the notice stating that I don't want to become within 6 months of the attaining the majority. But if you fail to give notice within 6 months of attaining the majority, you are automatically will become a partner of partnership. Deemed to be a partner of partnership. So what is the impact here? You are a minor, continue to attain majority attained, immediately become a partner. Consider you joined the firm 5 years back when you are 13. Now you are 18. 5 years completed, you attained the majority and you decided to become a partner. Now, the moment you are a partner, you are liable for all the acts from 2013 on. Like that means 5 years back. When you was admitted for the benefits from there also entire liable for all the debts, losses, liabilities are. But if you decide not to become a partner, then you are not liable for any of the debts which was there earlier also, because you can't hold minor liable for anything because it's incapable of making a contract. So that is with respect to minors related part. So minor admitted to the benefits of partnership firm. Any contract be bound by a contract because minor is void. We know minor can't be bound by any contract because minor's contract is void. Because what do you mean by the void? Not enforceable by law. Not merely voidable. Void will discuss in first. There are some rights the partners, minor will get. What are the rights? A minor partner has a right to his agreed share of the profits and of the firm. If he agreed for 5% share, he has the right to receive 5% profit. But he can't question only why this 10 lakh rupees profit, not 20 lakhs. The question is not there. He can have access to inspect and copy of accounts of the firm because he is not an outsider. He is actually admitted by other partners. If one partner transfers anything to other partner, then other partner is not eligible. You are a first partner, you are eligible. He can sue the partners for accounts or for repayment of his share, but it happens only when he is severing his connection with the firm and not otherwise. What do you mean by severing? Separating connection from firm. On attaining a majority, if he decides, he may within 6 months elect to become a partner or not to become a partner of a partner. If he elects to become a partner, then he is entitled to share to which he was entitled as a minor. If he was earlier getting 5%, now also will get same 5% from it. He just change of position. If he does not, then his share is not liable for any action of the firm from the date of public notice served to that effect. What do you mean by the public notice? There was a minor, he attained the majority. Within 6 months, he decided not to become a partner. Please make note of it. You should give an advertisement. If you do it, then he is not responsible from the date it is given. What are the liabilities before attaining majority? Only to the extent of the profits and all the property of the firm, the liability of the minor is no personal liability. He cannot be declared as insolvent because who is insolvent? Whose liabilities are more than assets? When you can't have debts with minor only, then how can you hold somebody liable? Within 6 months of after attaining majority, or obtaining the knowledge that he had been admitted to the benefits of partnership firm, which date is later, whichever date is later, the minor partner has to decide whether he shall remain a partner, or leave the firm if within 6 months. Where he has elected not to become a partner, he may give public notice that he has elected not to give public partner, and such notice shall determine his position with regard to the firm. If he fails to give the notice, on the expiry of the said 6 months, he will automatically become a partner. During the only when he is getting out of the firm, he will get the profits. Yeah. Or it is like until the attaining of majority, you will not get the money because the not capable of signing anything is not there for you. If he decides to become a partner, then either his own willingness or failure to give a public notice within 6 months. Any of the case, your partner, in that case, he becomes personally liable to third parties for all acts of the firm done since he was admitted to the benefits of partnership. His share in the property and profits of the firm remains the same to which he was entitled as a minor. That means profit sharing ratio, asset sharing ratio, everything is same. If he decides not to become a partner, give a public notice. Until the public notice is given, you are responsible. And any activity done by the firm after his retirement, date of notice, then he is not liable. Now the next part. Partner coming in and partner going out. Introduction of partner and going out of partner. Whenever a partner comes into a firm, if you want to introduce, no partner will be introduced without the consent of all the existing partners. Okay. If a new partner enters a firm, then the liabilities of new partner starts from the date when he is admitted as a partner, from the date of admission as a partner. Unless he agrees to be liable for obligations incurred by the firm prior to the date. That means I am joining on 1/1/25 and I am telling on this date. No, I am responsible for 36/24. Don't worry. Then he is liable for 36/24. If not, it is 1/1/25 only he is liable. But mere agreement among the partners cannot operate as a novation. It is not a novation because there was benefits there. Now it is being agreed with the partners. If there are only two partners, this section does not apply to partnership of two partners, which are automatically dissolved by the death of one partner. Because when you are to one term, this is also partner. 6 months condition is not there. That is only for corporates, LLP and company, not for partnership firm. Once a partner retires, he should retire with consent of all the other partners, and he should email with an express agreement by the partners, and where the partnership are built, he can give the notice in writing to everybody that his intention to retire. I don't want to continue. Let me retire from the firm. He is discharged from liability to any third parties for acts of the firm done before the retirement of an agreement. That means I am retiring at 25, but I was partnering 21, 22, 23, 24, all the 4 years. Still there is a liability pending. Even after retirement also I am liable for 21, 22, 23, 24 because they are incurred when I was his partner. But any liability incurred after 2025, I am not liable. provided I give a public notice. If I don't give a public notice, then for the additional liabilities also I'm liable, I will apply to them. He continue to be liable for all the acts to third parties until he gives a public notice of his return. Again, last one, 4 marks question. This is expulsion of partner. What is expulsion of partner? Expulsion of partner means sending out of the firm, the partner. Partner being sent out of the firm. So whenever, okay, first of all, can the existing partner throw somebody out of the partnership firm? Is it possible? Yes. What are the conditions? 3 conditions are there. 3 conditions. If 3 conditions are fulfilled, you can send somebody out. If not, you can't send somebody out as a partner. Now, first one is there should be an agreement. Partnership will consist of the point that if there is something wrong by the partner, majority of the partners can send them out. It should be there in the agreement. Second one is majority consent should be there, and you should throw him out in the interest of the partnership firm. In the good faith, not in the bad faith. As I told, there was one exam question here based on this. ABC 3 partners are there. Their wives started fighting in one club. A's wife, B's wife started fighting. Now, A's wife told A, throw B outside the firm. For which majority, that means A and C should vote together. So A convinced C to vote, both voted and thrown B outside the firm. Now B went to the court. So this is illegal because it is not in good faith. Why did B die thrown in the partnership firm? Because the wives got fought in the club. Because of which it is not in the interest of the firm. So just wanted to take the personal revenge on me. That is not valid. Yes, it is invalid of the expulsion. So the power of expulsion must have existed in the contract between the partners. That means partnership B. Powers has been exercised by majority of the partners, more than 50%, and should be exercised in good faith, honesty. Remaining 2. Right? Out of 3. Total 3 partners 66 and 33. But before you go outside somebody, the following 3 things should be present. Checking whether it's in good faith or not. Did you actually send him out or not? You should check these 3 things. Expulsion must be made in the interest of the partnership firm. Partners should be expelled. He's served with the notice, that means you give a notice from tomorrow, from next month, you are not a partner. And you have given an opportunity of being OBH. In the interest of the firm, I give a notice, and if you want to explain anything, you please explain. That opportunity I give it to you. That is testing the good faith. Other than that, if any partner is expelled, that is null and void because that is invalid. What is insolvency? Where the liabilities is more than assets are unable to pay the debts. The liability of estate. What is estate? Property of a dying partner, deceased partner. After I retire, if I have any personal assets, consider I died on some day. Sorry, not retire. I was a partner of firm. I still have some personal assets. While I was a partner, I died. Now, is my personal assets also liable for all the future acts of the firm? For all the future acts, I am not liable even the notice is not given because that itself is a notice. But for all the earlier acts, I will be liable. My property will be personally liable for all those things. So I was alive. The rights of an outgoing partner to carry on competing business. Can an outgoing partner do the competing business? That means once I leave this academy, can I start my own academy and start teaching? Yes, I can generally do. But he should not use the firm name. I can't tell that, no, this is also success edge. Please come and take admission. I can't use it. Represent myself carrying on the business of the firm? No. This is extension of the branch only. This is an extra branch of the same. I am acting on behalf of success edge. Please come. Or you can't solicit. What is solicit? Influence. Influence. The custom of persons who are dealing with the firm before he ceased to be a partner. That means you can't take people from this academy to your academy, employees, vendors, you can't touch them. Then you can start the competing business. Can you do the restraint of trade? Yes, as per section 27 of Contract Act. 3 things: goodwill sale, limited time, limited geography. This is important. 4 marks question in the question. Right of an outgoing partner in case of subsequent share of profit. What do you mean by right of an outgoing partner? Consider A, B, C, three are partners are there. We are sharing 50%, 30%, 20% profits. Now, C retired. When I say retired, he is an outgoing partner. Whenever it goes out, what should be happening? Whatever the firm's profit is there, out of which 20% profit should be given to him because his share has to be settled, and 20% of the assets also should be given to him, his share of assets. Consider entirely put together is came down to 10 lakh rupees. 10 lakh rupees that C has to get. But C did not get any amount after his retirement. C did not get any money after his retirement. Now, look at the language, what they are using. Right of an outgoing partner in case, certain cases, to share subsequent profit. If you don't give my share, I consider that I am still a partner. Then, 2 situations are there. You are using my 10 lakh rupees and doing the business. That means my business is also invested in the partnership business. Then because of which what you have to do? If my 20% profit is there, that 20% profit again you have to give back either after I go out of the firm. For the subsequent profit after I retire. Or you should give me 6% interest. You should give me 6% interest. Where is the 6% interest?
Rate of 6%.
Where is it? 6% per annum. Into 6%, considering you are using my money for 6 months, into 6 by 12. So 60,000, so 30,000 should be my interest you have to pay. Either you pay the same share of profit before I retired, whatever the share I have, or you pay me 6% interest per period you use my money in the business. This is what right of an outgoing partner in the subsequent profits. This is unit number 2. Unit number is small only, but we'll take a small break, then we'll continue. Take 10 minutes break.
It's never happening. It's always 6 days normal.
Okay, we continue. The last unit of partnership. So this unit of the chapter is mainly talking about the compliance part. How do you register the firm or how do you dissolve the firm? So first of all, as we know, as per Partnership Act 1932, registration of partnership is not mandatory. You can do it without registration also. You can conduct the business, you can carry out the activities, you can make the payment, you can receive the payments, you can produce, you can sell, anything can be done without any registration. But whenever you decide to get your firm registered, there is an option also. So you have to submit the documents to the registrar of the firm, ROF, registrar of firms. So how you have to deliver? Either you send that post or you deliver the documents by yourself to the registrar. So what registrar? ROF, registrar of firms. Of the area in which any place of business of the firm is situated or proposed to be situated. That means the registrar situated in your nearby locality, you should give the documents to those or send the documents to the registrar. A statement in the prescribed form accompanied by the prescribed fee stating what should be there in those documents. Same partnership deed kind of thing. Firm's name, place of business, name of other places where firm carries the business, it is branch office, this is head office. The date when each partner joined the firm, date of admission, the name in full, and permanent address of the firm, and duration of the firm if it is only a partnership for a fixed period of time. It is and if you write all these things, the statement should be signed by all the partners. Or if the partners are not there, then they are by agents, specially authorized in this behalf. Each person signing the statement shall also verify in the manner prescribed. Here, a firm name, whenever you want to use, it should not contain the following words like crown, emperor, empress, empire, imperial, king, queen, royal, or etc., which is not desirable in the opinion of the central government. If you want to use any of these things, then you should use it with the permission of state government. Take the state government permission, then you can use these words. Once you deliver all those things, if the registrar is satisfied with the documents you have delivered and details you have given, he shall record an entry of the statement in register, not register, called as register of firms, and shall file the statement. Then he shall issue a certificate of registration of that firm has come into existence. As we know, registration is not mandatory. Registration is not mandatory. But if you want to do the late registration, what do you mean by late registration? You started the business in 2015, but you wanted to register in 2026 now. After 11 years, you want to register. That is late registration. So then there is a penalty of 100 rupees per year or of delay or part thereof. 5 years completed 500 plus 1 day completed also 100 rupees. For every day or one full financial year, it is 100 rupees per year. If you don't register, what are the consequences? This is again a 6 marks question. Consequences of non-registration of a firm. The question is like, the registration of a firm is not mandatory, but however, the non-registration of a firm are consisting of some limitations, some disadvantages. What are those? Those disadvantages are: Sometimes they use it as consequence, sometimes they use it as disabilities of non-registration. First one is as follows. No suit in civil court by firm or other partners against third parties. If you have given goods on credit basis or given loan to somebody and other party is not giving the loan, if you are as a partnership firm not registered, then you cannot recover that money. You can't go to the court for filing the civil suit with respect to third party. Nor partner file, neither partner can file nor the firm can file any suit in the civil court. It is only in civil courts. Criminal court anyway you can go. Criminal means somebody murdered, fraud, all those things have happened. That is allowed. But however, here other party, third parties can sue you. That is possible. You cannot sue the third party, but third party can sue you. That is there anyway. The firm or any other person on its behalf cannot bring an action against the third party for breach of contract entered into the firm unless firm is registered. And the person suing are have been shown in the register of firms as partners of the firm. That means only partners can sue even if they are registered. No relief to partners for set off of claim. What is no relief to partners to set off of claim? Consider as a partners, I am supposed to make some 10 lakh rupees payment to somebody. The same person is supposed to make some 2 lakh rupees payment to me. Instead of me paying 10 lakh, receiving 2 lakh, I pay directly 8 lakh. That means I try to set off the 2 lakhs. Can I do it? If I am non-registered firm, then you cannot set off. If you want to set off, you can set off up to only 100 rupees, not more than 100 rupees. Maximum set off you can do it is 100. If the value is more than 100, you can't set off. Then pay 10 lakh, receive 2 lakh separately. That is of transaction. Aggrieved partner cannot bring the legal action against the other partners or the firm. If your firm is an unregistered firm, and consider something happened, you think somebody is not working properly, not complying with any of the terms of agreement, anything, you cannot go to the court and say no, he is not fulfilling anything. Because you are an unregistered firm, you are a partner of unregistered firm, you definitely have nothing to go in the court against anybody, neither your partners nor outsiders. But only in case where a partner is acting in a fraudulent manner or cheating or mispresence, then you can go against him in the court. Only those cases, extreme cases. Normal cases, you can never go into the court. But such person may sue for dissolution of a firm or for accounts and realization of his share in the firm's property where the firm is dissolved. Only in the dissolution of the time, you can sue them. This is also some exception. That means what we discussed, if you are not registered, you don't have any rights, proper rights. No suit to be filed against third party in civil court. No set off. Third one is you can't sue the other partners, agreed partners. However, non-registration of the firm does not affect the following rights. You still have it even if you don't register. The right of third party to sue the firm. Yes, third party can sue you on you. That is possible. The right of a partner to sue only at the time of dissolution of the firm. Dissolution of the firm is still there. Or power of an official assignee or receiver of a court to release the property in the insolvent partner to bring an action. That means when the firm is going on liquidation or somebody is insolvent, then the court will appoint somebody called as liquidator or official receiver. He will sell the property, receive the money, settle the liability. Still he has the right to come and take over of that. The right to sue is available, but not exceeding 100 rupees. Sorry, not sue, right to set off. Sue or claim set off available, not exceeding 100 rupees. Or right to sue and firm proceedings instituted by legal representatives or heirs of the deceased partner of a firm for accounts of a firm or realize the property of the firm. That means when somebody dies, you can go to the court and get your property. When your father died, as a son, you can go as a legal heir and you can realize your property. However, you can see there's only cases where it is available. You can't sue for third party for any payment breach of contract, no set of exceeding 100. Then you can't sue other partner with respect to non-compliance of any duties or non-payment of money. But it is still allows third party can sue. It can do the set of up to 100 rupees, not exceeding 100. Then official receiver or assignee or liquidator can take over the assets and liabilities. Then at the time of dissolution of the funds, that this is there. And when a partner pay, the legal representative of the partners can still sue for the purpose of recovery of the assets or checking of the accounts. These are the 5 cases where it is still allowed. Then comes dissolution of the firm. What do you mean by dissolution of the firm? It is the official closure of the firm. We are closing the firm from operation. That is dissolution of the firm. Now, dissolution of firms is of 2 kinds. Dissolution of firm is of 2 types. One is without the order of the court, we call it as voluntary dissolution. Second one is by the court order. Dissolution by the court. There are 2 things. One is voluntary, you can dissolve. Second one is compulsory court will dissolve you if you don't comply with the required things. What are the without court order? Voluntary dissolution are dissolution by agreement. What is dissolution by agreement? Consider you decided you will do business for 2 years. 2 years completed. There was an agreement to finish it off. So close the firm, dissolve it, then get out of the business. Dissolve by agreement. With the consent of all the partners, if there is an agreement with them, we can over. There are sometimes compulsory dissolution. See, this is important. This mode of dissolution, both the things are important. With the court, without the court. Compulsory. So, how a compulsory dissolution can happen? By the adjudication of all the partners, or all the partners but except one as insolvent. That means everybody became insolvent, or everybody but one became insolvent. Because at least we need 2. If 2 is not there, then it is 1. Or an happening of such event makes it unlawful the business to be carried out, or for the partners to carry it on in partnership. Whatever the business you are doing, that has become unlawful. Immediately you have to close your business. So when consider I am doing a business of selling cigarettes, and I decided to do the business for 5 years. Next year only government of India told selling of cigarette is banned in India, illegal. Then you have to close the business. That is compulsory dissolution has to happen. However, this is there. If you are doing more than one adventure, 2, 3 adventure, if one thing becomes illegality, then you can close that, keeping the other legal things as continuing part. Or dissolution on happening of a certain contingency. What is contingency? Uncertain events. Uncertain events. So what are those contingencies? Subjected to contract between the parties. Subjected to contract between the parties. Firm can be dissolved on happening of any of the following contingencies. One is firm constituted for fixed time. That time has been expired. Over. Firm constituted for one or more adventures. Purpose. The purpose is also complete. Then also come closure. By death of a partner, over, or adjudication of partner as an insolvent. Under all these cases also you should dissolve the firm. Because see, definitely everybody becomes insolvent. Not necessarily. If you don't have the money, then you are insolvent. If you have the money, you are not an insolvent. That's why it is called as contingency, uncertainty. Dissolution by partnership at will. That means whenever it's a partnership at will, a firm may be dissolved by any partner by giving notice in writing to all the other partners. So, yes, we thought of doing the business for a long time, but today I am feeling no, the relationship is not working out. We close it out. Give a notice in writing to everybody. Stop the partnership at will business. That is the case of this. When it comes to by court, whenever anybody becomes insanity or unsound mind, court will order case is incurable, remove them. That is compulsory dissolution. But temporary sickness is no ground for dissolution of the firm. What is temporary sickness? Temporary means for short period of time. Because of you got some disease which can be curable. Some consider 1 year, 2 years. still treatment is going on, you are acting weirdly, that is okay still. You can't, no need to resolve. Only insanity or absurdity, that is permanent. Permanent means fixed. Or permanent incapacity. What is permanent incapacity? What business you are doing? So I am doing delivery business, delivery of goods and services. While you are riding, you met with an accident, both the legs and both the hands are got affected. Now, are you capable of doing the business? Incapable. This is a person. Permanent incapacity. Or misconduct. What is misconduct? Some fraud, forgery, guilty by the court. Or persistent breach of agreement. What is persistent? Continuous. Not once, twice, 10 times, 20 times continuously you are breaching the agreement. That is why you should close the business. Again, some other category also there. Like embezzlement, keeping erroneous accounts, holding more cash than allowed, refusal to show accounts, etc. Now, transfer of interest. What is transfer of interest? Transfer means you are selling your share of the capital, profit, or anything to the other party. Where a partner other than a partner civil has transferred whole interest, whole of his interest in the firm to a third party, or has allowed to share to be charged or sold by court in recovery of arrears of land revenue. That means you did not pay any land revenue taxes, stamp duty, then court has taken it and sold it. Then in that case also court will order you to close the resolve the firm. Continuous or perpetual losses. Perpetual loss means first year loss, continuous 5 years loss, continuous 10 years loss, every year loss. There is no profit on it. Then why do you want to do the business? Because the purpose of business is making the profit. If you are continually incurring the losses, you better do something else. Or some just and repeatable ground. But wherever it feels it is sufficient to dissolve, then they dissolve it. Like deadlock in the management. What is deadlock? 50-50 happening. He is not talking, his other party is also not talking to the other party. There is a 50% part. Where the partners are not in talking terms between them. Or loss of substrata. What is substrata? Objective is only one. Whatever you want to do. Or gambling by a partner on the stock exchange. You started trading, buying the shares, selling the shares more so that the prices of the stock market are going up and down is happening. That is why the compulsory dissolution of the firm happens. This is without the order of the court, it is by the order of the court. Now, once the firm is dissolved, what is the consequences? I don't think it is important. You can go through it once. Tendering authority of partners purpose of any other. This is important. 4 marks. How do you settle the accounts? For example, you dissolve, assets are gone. You have to make the payment. To whom you make the payment first? Mode of settlement of partnership accounts. Whenever it is you want to settle it at the time of dissolution, it must observe that if there is any losses, including the deficiency in capital, shall be paid first out of the profits, next out of the capital, lastly, if necessary, from their own portions I can tell to share the profits. If there is any loss, check do you have any profit, use that profit to pay that loss. Profits are there, not sufficient. Use your capital in the business. If that is not sufficient, bring the money from your own personal money, personal account. Then you have to pay. If the assets of the firm are there, including any sums contributed by the partners to make up deficiency of capital, must be applied in the following manner. If the firm's asset, first use it for paying the debts of the firm to third parties. Outsiders pay it over. Once outsiders pay to each partner relatively what is due from him, due to him from capital. Capital will pay. After payment also, if there is anything left, right, pay to each partner, what is due to him from capital. Okay. In paying to each other, relatively, which is due to him on account of capital. This is in excess of capital. This is advance money. This is capital. Extra loan given by the partners. First pay loan taken from outsiders. Second pay loan taken from partners. Third pay partners capital. If still money is left, then you will share that with the every partner in the profit sharing ratio. This is payment of firm debts and supply debts. If you sell any firm assets, using that money, try to first settle the firm debt. If there is any money left, then use it for your personal account. Separate assets are there, sold, first settle your separate loans. If there is any money left, then bring it and put it for partnership firm loan. This is the unit number 3. So unit 1, unit 2, unit 3. The question which is asked in September 25 paper, RTP September 26, May 26 article. Many times it is repeated. A, B and C are partners in an unregistered partnership firm. That means there are some limitations for this firm. Named Mrs. ABC Associates. Is the suit maintainable in the following cases as per the provisions of partnership? They filed some suits. Is it allowed or not? Few things allowed, few things not allowed. First one is A filed suit against B. That means on the partner only who had stolen the goods of the firm. That means fraud, cheating kind of thing. It is not a normal case. It should be maintainable. We'll check that. First one is yes. A filed a suit against ABC for claiming the shares of the assets and dissolution. Dissolution is also allowed. In the exceptions, it is the dissolution. Yeah, who is M here? Some third party filed a suit against the firm ABC for recovery of 10,000 dues from M. 10,000 dues from firm. M also owed 4,000 to the firm. The firm claimed a set off of 4,000. Because if it is unregistered, maximum set off can be done is 100. If here it is 4,000 set off, that is not possible. All the three cases, you can find the case, but last case, first and second, you can find the case. Third case, you cannot do the set off. First point, A filed a suit against B who had stolen the goods of the firm. The said suit by A is maintainable. Why it is maintainable? Because it is cheating kind of thing. If it is normal case, it is not maintainable. Justification they have given here. I will not read it. You go through it. Second one, A filed a suit against ABC Associates for claiming the share of assets and dissolution. This is also maintainable because at the time of dissolution, still it is unregistered firm. You can sue the firm for your third part. Third one, M filed a suit against the firm for recovery of 10,000. Can they recover 10,000? Yes, third party has the right to recover the money. But M also owed 4,000. The firm claimed set up. The said suit by M is maintainable. Why it is maintainable? Recovery of 10,000 is maintainable. However, the firm cannot set off claim of 4,000 as it is more than 100 rupees. But M entitled to recovery of 10,000 from the firm. I will receive 10, you pay me 4. But even if you don't pay 4 also, outsiders don't pay 4 to firm also, firm cannot go to the court because it is unregistered. That means there's the risk there. That's why there is better to register. Simple question. If you understood the concept, it is you could have been answered this. Then second one, which is also Jan 26 paper. Explain.
Direct question.
Huh?
Direct theory question.
Few times direct question, few times this is a case study question. We have A, B, C formula there. If they ask what are the limitations of non-resisting, that is direct question. This is case study question. Like it is not so case study like Companies Act or Contract Act. They are big case studies. Here it is very small. Explain with reference to provisions of Partnership Act. Whether a partner can be introduced without the consent of other partners, not possible. You have to take the consent of all the existing partners, written consent specifically. Then you have to write it. If yes, describe the procedure. If no, in what manner partner can transfer a share in the partnership with the consent of all the other partners, he can share transfer to other partner. Describe the rights of transferring the incoming partner. He has no rights with respect to 3 points. Can't question the accounts. He cannot inspect the books. He cannot interfere in the business. But he can share only the profits of the firm, whichever is given. During the continuance, exactly same. During the dissolution, he can inspect the books. The dissolution inspection is available. In dissolution, everything is allowed. Only at the other than dissolution continuing part, it is not available. This is exam question. What comes? This is 7 marks question, I think. Jan 26, right? We will see the question complete itself. What are the questions of CA Partnership Act? Question number 3. 1C kind of thing. Here only it is there. Leave it. 1C only. 1C. Explain the provisions of Partnership Act. Partner can be introduced with the consent of all, that is 2 marks. During continuation, during dissolution, that is 4 marks. 8 marks question. Exam question only. You see here on the answer. I can try here, right? Come back to this part. No person can be introduced as a partner of a firm without consent of all the existing partners. What manner partner can transfer is in no person can be introduced without the consent of all the existing partners unless specified by partnership agreement. Now, a partner cannot, by transferring his own interest, make anybody else as a partner in his place, unless other partners also agree to accept the other person as a partner. That is first part. However, he can still transfer the interest, but the transferring won't become partner. So, rights of transfer here during the continuance. Not entitled to interfere with conduct of business. He is not entitled to record accounts, not entitled to inspect the books. He is entitled to receive only share of profits. Then he cannot challenge the account. That's what they told. Second one, transferring during the dissolution is will be entitled against the remaining partners, receive the share of assets, and for the purpose of asset lending, he is entitled for accounts as well. From the date of dissolution. From the date of dissolution is entitled, not before the date of dissolution. Sustain. Then again, one more question. Same Jan 26 exam. See here. Case study question has come. I think you read it, you go through it once. I don't want to waste my time. You read this question, I directly just go through the important parts and I will discuss the answer. You read the entire question once. I think multiple questions are there. First question, Second question, third question. 3 questions are there here. What's the question?
The first question. It will be treated as partnership.
What's the question? Ramesh is a supplier of fruits and vegetables in
Invited.
Azadpur Mandi, Delhi. To expand his business, he invited Suresh and Mahesh to invest in his business. Suresh and Mahesh were agreed, but they put a condition that they will share the profits in the ratio of 33 each, 33%, and interest at 12% on the capital, which they will make, okay, whichever is higher, but they will not share losses, okay, partners in profits only. That is possible. Advise whether this association will be treated as partnership. Yes, partnership profits only that comes. Second, Manak was working as a construction contractor from several years. He engaged a roofing, a labor and material contractor for procurement of raw material and labor for construction site. All the expenses pertaining to raw material, labor wages will be borne by Manak. Manak agreed to give roofing 5% of the contract amount for procurement. Whether this agreement will be treated as partnership, explained according to the partnership act. No, it is just like agent kind of thing. 5% I am giving for like labor only. 5% I am giving. Shantanu was running a business of ABC agency several years. He purchased 10 cars amounting to 100 lakhs. Okay. For the purpose of running them on hire, he borrowed 50 lakhs for this purpose from Shankar. Shankar proposed that he will take 25% of the profit share. Still, I am not taking because it can be a lender of the money. First exception that comes. We will see the other partners. He has nothing to do with the business, okay? Shantanu agreed for his proposal. After some time, Shankar told his friends that he is partner of ABC travel agency. After some time, Shankar told, okay, Shantanu denied the fact. He contended that sharing of profit is only not a partner in his travel agency. Advice, yes, it is not there. Because money lender, it comes. Because there should be business or multiple things. Only first one is partner, second and third is not partners. He is partner in profit. See here. Agreement to share the losses is not an essential. It is open to one or more things. Yes, it is a case of partnership. First one. Which partner it is, I think, given somewhere, but partner profits only this is. Decided to share profits only. Here they give one more alternate answer, that is wrong. Just go by the main answer. Yes, it is a partner profit only. Then second question is, second question is what? That 5%, right? It will not be termed as partnership just by listing 5% of the contract value. Third one, 25% share, it is not a partner. The person is not a partner, it is not there. I think some answer is missing here, but it is not a partner. Then again, Jan 26 exam, one more question. Describe any four mutual rights and liabilities of partners in the partnership form with reference to the provisions of partnership act. What are the mutual rights and liabilities? Huh? Huh? Louder. Okay. No remuneration. Describe any three grounds on which court may dissolve. Resolution by court. Insanity or unsound perpetual losses, permanent incapacity, misconduct, continuous persistent breach of contract, and then just and equitable grounds. The deadlock in the management, those things. We have to write. They have done many things, but they asked only three things. You should write only three. 6 marks question, I think. Deadlocks, loss of substratum. So they won't be given, but not the points. I think I have to correct this. June 24, September 25 RTP, Jan 25 RTP, again came in articles, model test paper. Two questions. PQR form partnership agreement to operate motor business along specific route for duration of 12 years. This is fixed period partnership. After operating the business for 4 years, it has observed that the business incurred the losses each year. Despite this, he is determined to continue the business for the remaining period. Okay. Examine reference to Indian Partnership Act. Can he insist to continue the business? If so, what options are available to Q and R who are reluctant to continue operating? Reluctant means not interested in continuing business. No, if Q and R goes out, there is only one partner. If there is one partner, it has to shut down, dissolve automatically. Or they can convert themselves as partners in profits only also. It's up to them if they don't want to check the losses. A and B operate a textile merchant business in partnership. Mr. A finances the business and is a sleeping partner. Okay. In the regular course of business, we acquire certain fabric goods. Who is the sleeping partner there? A finances and sleeping. A is sleeping partner. B acquires certain fabric goods belonging to C. However, B is aware that these goods are stolen property. Who is B here? B is a partner. Okay. Despite this knowledge, B proceeds to purchase and sell home some of these stolen goods. Moreover, B records proceeds from these sales in the firm's books. Okay. Now A wants to avoid the liability towards C on the ground of misconduct by B. In the light of the provisions of the Indian Partnership Act, discuss the liability of A, B towards C. In the ordinary course of thing, it is liable. A is not liable for this thing because it is a stolen goods. It is a cheating case, fraud or cheating part. You can read the question one more time. May continuous losses may, but they can tell sir it is initial stage. Our business is cash burning. We should give the offer first. That's why there is losses. If they prove that there is going to be profit, they might not get up. So it's not called as an option to order for resolution also. I think it is also given there. Same thing only. Whatever we discussed, it is given there. Here it is A is also liable for the debts. He cannot claim the time of living but liable for all those things. If it is in the operations of the business, they can still liable. They are still liable for the operations of active partners. That's what it is. Again, September 25. All those questions are you can manage. If you read everything one more time and start doing the question and answer, you can do it. There is no problem. Look at this May 25 question. The partner intended indeed virtually embraces the character of both principal and agent. The implied authority of a partner to bind the firm by all the acts done by him in all matters connected with the business is done in a usual way, not beyond the nature of scope of partnership. Explain in reference to the provisions of partnership provisions of Indian Partnership Act 1932. So I think it's not there. May 25 never say that. What is the Kafka Munsi? The question was okay. Sorry, 3 right? 3 are try to be some question. No, this answer. You should do it in the usual business whatever the firm does, and that is done in the normal conduct of business, and you should do it in the name of the firm. Implied. Thanks. This we discussed. I think based on both. In the unit number 2 only we discussed that. Wait, what's the page number? One. This one. Implied authority. This is called as implied authority is however subject to the following restrictions. Which was asked for 6 marks. 6 marks, right? 5B. 7 marks question. Only that much answer is there. So that's why I suggest you to read everything once again and do the question and answer. The will be very clear. No need to read everything. Writing one or two questions on a daily basis is required. But remaining things you can just go through it. Question answer, then you can proceed to some other chapters. So by which we complete partnership act also. This also took us almost 3.5 hours. This is also around for 21 marks. So we completed 21 plus 21 plus 6. 42 plus 6, 48. Around 50 marks paper it is completed. Now we are left with main 3 chapters: contract, SOGA and negotiable instrument. IRF is of one question. We'll see. The time is available. Then we'll discuss that. If not, that's a problem. You can read the question. So what do we start? Do we start and finish off negotiable instrument or we start with contract form? There will be questions. You can manage that. I don't think we need. I can show the questions. I will read the questions. So page and question chapter number 5, right? According to the provisions of LLP 2008, state the provisions with respect to registered office of LLP and changes therein. Every LLP should have registered office at the time of incorporation. They should give or within 30 days you have to submit. What should be the consequences if these provisions are contravened? Second one is discuss what are the provisions of LLP relating to minimum number of partners required and eligibility criteria. Minimum 2 partners, maximum unlimited. Eligibility is body corporate can also be there, individuals can also be there, but disqualifications are also there. Individuals who are unsound, insolvent, and is at okay. First one is unsound mind. Second one is undischarged insolvent. Third one is he applied to be insolvent, but application is pending. That is third point. So A, B, C, 3 points. See, 5 close friends decide with C when that is in Jan 26 exam, whatever we just now discussed. Next question is also asked. This is every question is for 6 marks only. There is no other class. September 25 question we are discussing. I think some mistakes are happened in the answer. We will discuss the question. 5 close friends form the LLP. You did LLP for educating 4 children as NPO. Is it possible? LLP can never be non-profit organization. It has to be for profit organization. They were Mr. A, non-resident, B also non-resident, C resident, D resident, Miss E resident. That means they have given I think for DP selection. At least 2 designated partners has to be there. Out of which 1 should be resident. Here 2 residents are there is no problem. Only one problem as I found is this one, NPO. It was decided that Mr. A, B will be appointed as designated partners. So A, B here. A is enter, B is also enter. No, that is not possible. Designated partner should be minimum 2, out of which 1 should be NP. Sorry, 1 should be resident of India. With reference to provisions of LLP, answer each of the following questions. Whether eluded LLP can be formed for above purpose, not possible. Whether A, B can be appointed as DP, not possible. A with C, D, E can be there. Or 2 residents are 2 DPs out of which one the slip is required at least. So cannot be found for LPO. DP at least every element shall at least 2 DP out of 1 shall be less than 10 DP. Here A appointing A and B designated department does not arise only because they are not the sense. Before that, first of all, you should bring the LLP to incorporation. If you are bringing it for non-profit, it can't come into existence only. When it can't come into existence, appointing is too late, not required. That is too fast. This is not required. This is the only answer which I am showing you. I think there are some other questions also next year. RM's decision.
Questions.
Really there are question. Here it is there. From here it is a different question. It's entirely a different question. 7 marks question, then this is also a different question. Everything is different question only. Okay, some questions are also only that part is the 11 point. Next one is it is asked for September 24 paper, May 25 RTP and LTP. Referring to the provisions of LLP, answer the following. Under what circumstances LLP compulsorily required to change its name? When it is undesirable in the opinion of the government and it is resembling to the existing trademark or existing body corporate, then they have compulsorily changed. Also explain compliance requirement with the following name change and consequences, if any, in case of default. If they don't change, central government will allot the new name within 3 months, or also will issue to certificate of incorporation. What do you mean by small LLP? It is old provision 2024, it will be 440, sorry. LLP it is 25 lakh and 40 lakh. Here there is no change, LLP is still same. Only company has changed. So not exceed 25 lakh rupees. And there is not exceed 40 lakh rupees. Turnover as posted for solvency account. This can be managed, there is no problem. LLPs. Explain the characteristics. Body corporate. That 4 points. Indian company, foreign company, then LLP, foreign LLP. Don't write this language, write the normal language. Company incorporated in India, company incorporated outside India. LLP incorporated under the LLP Act 2008 or LLP incorporated outside India. But it does not include corporation sole and cooperative society. Yeah, body corporation. Mutual agency. Yes, here partners are not the agent of other partners, but partners are the agent of only LLP because it is an LLP chapter. Foreign LLP incorporated outside India having place of business in India. Artificial legal person. Yes, because it is a separate legal entity, it is an artificial person which can hold the property, buy the property, transfer the property, acquire the property, everything can happen. That's it. If you read, you will understand. Okay, you tell me, shall we go for contract or shall we finish go for negotiable? If we complete negotiable, then we are left with contract and so far tomorrow. And then understood. Relax for a minute. Okay, we continue. Negotiable Instrument Act 1881. First of all, you should understand what is negotiable instrument. What is negotiable? Negotiable means transferable. Instrument is some type of instrument which is specified here. There are 3 instruments. And to regulate that, there is an act, Negotiable Instrument Act 1881. Whenever you are transferring an instrument from person to person, how those instruments are being governed, how those particular rules and regulations of those instruments are being discussed here in Negotiable Instrument Act 1881. So, cut out all the unnecessary things. So, Act does not define the term negotiable instrument. However, it only provides only 3 kinds of negotiable instrument, namely bill of exchange, promissory note, and check, which is payable either to order or to the bearer. There are how many types of instruments? There are 3 types of instruments: check, promissory note, and bill of exchange. Promissory note, check, bill of exchange, and check. Either it is payable to the order or it is payable to the bearer. What do you mean by the word bearer? Whoever holds that instrument will receive the money. He is eligible to receive the money. That is called as payable at bearer. What is order? It is payable only to the order of some person or some persons. It is payable to order when it is expressed to be so payable to a specified person. For example, pay A, B, C, D, etc. Specific person, and does not contain the words prohibiting its transfer. Non-negotiable transfer should not be there here. NNC should not be there. What is NNC? Non-negotiable transfer, non-transferable instrument. So it is transferable by endorsement and delivery. What do you mean by endorsement and delivery? Signing on the back of the instrument and giving it to the third party. Again signing, again giving. It is called as endorsement and delivery. What is delivery? Don't sign, just give it the third party. For example, if it is the check, if you see on the pay that column of pay is there. If you write pay person A, then the person A has to, if you want to give it to third party, person A has to sign it and give it. But if you just give it without writing anybody's name in a blank name, you can transfer it to any people without signing on back of it. Who wants to encash it will write their name and then make it full instrument. A negotiable instrument is payable to bearer when it is expressed to be payable. Example, pay bearer. Instead of writing somebody's name, they wrote pay bearer. Whoever holds this instrument, pay the money to that instrument person, holder of instrument. Now, this is important. You may ask this 7 marks question from this essential characteristics of negotiable instrument. The similar way, characteristics of promissory note, characteristics of bill of exchange, characteristics of check, everything is there. First we will discuss negotiable instrument. The characteristic of negotiable instrument are, it is necessarily in writing. Your oral promise is not considered as negotiable instrument. How can you transfer something which is not in writing? That is why it should be compulsorily in writing. And it should be signed. Without signing, they just equal to a paper, piece of paper. There is no value on it. It should be signed. It is freely transferable from one person to other person. What is freely transferable? It is doesn't mean that without consideration. Freely transferable means without any restrictions. You can directly transfer from person to person. Holder's title is free from defects. What is holder's title is free from defects? If you are holding the shares, then you have a clear ownership, full ownership. It is not like somebody is encumbered, somebody is having the mortgage, hypothecation is there. No, it is free from all the defects. It can be transferred any number of times till it is satisfied. Any number of times means I can give to 100 people, that again it is being satisfied. I can sign it and deliver it. If it is order instrument. If it is bearer instrument, I can directly deliver it to the next party. I can transfer it to any number of persons till it is satisfied. What is satisfied? Till it is paid. Every negotiable instrument must contain an unconditional promise or order to pay money. Here, to pay money only should be there, and that promise or order. What is promise? The word promise is in promissory note. The word order is in bill of exchange and check. And it should be money only. I promise to pay 100 bags of rice. No, that is not called as negotiable instrument. That should be payment of money only. The sum payable at the time of payment must be certain. I would like to pay some amount of money which I feel like paying. No, that is not a negotiable instrument. I will pay 10,000, 10 lakh, 10 crores. Amount should be certain, fixed amount. And the instrument should be delivered. Mere drawing of instrument does not create any liability. If I just write the check and keep it in my pocket, is there any liability for me? No, I should just write it and deliver it to some party. Then only can go to the bank, my liability will get created. These are some characteristics of negotiable instrument. Then comes first instrument, which we call it as promissory note. What is a promissory note? It is an instrument which is there in writing. It is an instrument in writing which contains an unconditional undertaking or unconditional promise to pay certain sum of money only to the bearer or certain order of the bearer by the maker. See, if I borrow some 10 lakh rupees money from somebody, I should write one stamp paper and give it back to them as a guarantee. That writing of a debt thing is called as promissory note. I'm promising you that I will pay the money later. Promissory note. We take oral promise cannot be proven, but this official paper promise can be proven. That is why we make the stamp paper. So, promissory note is a note in which it is signed by the maker. Maker means if I am borrowing the money, I have to write the instrument. I should sign that instrument and give it back to the third party. That instrument is given to third party. That we call as bearer or person who is receiving the money, and it says to pay some money, and it has unconditional promise to pay that money. Again, there are two parties to the promissory note. One is maker, second one is paying. Paying means who receives the money. Maker means who draws the instrument. Who draws the instrument. Maker means the person who makes the instrument, draws the instrument. Pay is the person who receives the money mentioned in the instrument. Some again essential characteristics are also there similar. It should be writing. It should be express promise to pay the money. It should be definite and unconditional. That means yes, I will pay the money without any conditions. Signed by the maker, promise to pay money only, and the money should be certain. Only thing which is important here is it should be express promise. when we go to bill of exchange, we will see same characteristics, but with this unconditional order, not promise. Here it is promise. Mere acknowledgement of debt is insufficient. Like, I have taken 10 lakh rupees for person A. You are telling, you are not telling that I'll pay the money. You are not telling any promise. You are just acknowledging that you have taken the money. Yes, the loan is there. That doesn't create any promissory note. Promissory note should be definitely consisting of some unconditional promise to pay the money. That is promissory note. But sometimes the language is very clear. The language is very clear. Of promissory note is such that amount payable can easily be ascertained. In such case, the promissory note will be valid. What is that? Even the amount is not certain, but easily you can make it certain. Like that. I pay you 1 lakh rupees plus 10% interest. What is the total amount I will pay? It is not mentioned. But can you easily ascertain 1 lakh plus 10% is 1 lakh 10,000? Yes, still it is valid. It need not be contained in the word colors 1 lakh 10,000. 1 lakh plus 10% interest, 20% interest, that is still valid. But here this maker and payee should be definite and different persons. It should be stamped also. What is stamp? You should take writing in the stamp paper, bond paper. That is promissory note. Then comes bill of exchange. What is bill of exchange saying? It is also instrument in writing containing an unconditional, not promise but order, signed by the maker, directed a person to pay certain sum of money to or to the order of a certain person or to the bearer of the instrument. So what is this? It is like bill of exchange is generally used in credit sales transaction. Like whenever A sells some goods to B, A only will draw the bill of exchange for the amount and send it to B with the goods. The B has to sign the bill of exchange and send it back. Now the maker is the seller. Now the maker is seller here. The party who is signing is different person. Who will receive the money? That is a matter of discussion. Like B will pay the money, A will receive the money. I sold the goods, I will receive the money. Signing is done by B and I will receive the money after maybe 3 months. But within 3 months, if I need of money, what do I do? Discounting of bill, I go to the bank. I will be some third party. I give the bill, I take the money. Now, who is the person eligible to get the money? Bank. Now, payee will become the bank. Payee can be maker also. Payee can be some other third party also. Here, at least 2 parties have to be there, or it can be 3 parties also. Where single party plays an two orders. Single party can act as 2 parties. One is maker as well as payee. Maker as well as payee. One is drawer, drawing. Drawer is maker of bill of exchange. Drawing is the person on whom the bill is drawn. The buyer is the seller. He is the buyer. Then payee is a who receives the money. Three parties. There are 2 parties. Here it is 3 parties. See, this is also important. They can ask 7 marks question. Characteristics of promissory note. Or they can ask this characteristics of bill of exchange. That is also 7 marks question. What are the characteristics? Same. Writing, express order to pay. Here not promise, here the order is there. Definite and unconditional. Drawer must sign the instrument. Drawer, drawee and payee must be certain. 3 parties may not necessarily be there. A single party can act as a role of 2 parties, maker and payee. It must be certain, money only, and it should be stamped. Almost everything same. Only that order, only that promise. Then what is the difference between promissory note and bill of exchange? You read it. Which one? Maker and payee must be certain, okay? That A and B should be certain. Definite and different persons. A promissory note cannot be made payable to the bearer. Only Reserve Bank of okay. What do you mean by a bearer? Consider I gave a loan to you. Who is the maker here? You are the maker. Samata is maker. Then payee is me. Maker and payee. Now you cannot sign some instrument stating whoever holds this instrument will get the money. Because currency notes, if you see, that is also a kind of promissory note only, which is promised by RBI note. Only RBI has a power to make some notes which are payable on bearer. Other parties cannot make it because here it is person A, person B, both are specified. Okay, person B is payer, person A we don't know. That is not possible. That is what I tell you. Bill of exchange will go through it. Then the third instrument is check. Check is also a bill of exchange. That means whatever the characteristics we have seen in the bill of exchange, it is also there for check. Check is a bill of exchange. Drawn on a specified banker and not expressed to be payable otherwise than on demand. That means I gave a check to somebody, consider Samota, then will the bank only come to Samota and ask the money? You have any check, I give the money? No, you have to go to the bank, demand the tenor level, banker will give the money. So money is not payable otherwise than on demand. And it includes electronic image of truncated check and check in the electronic form. Check in the electronic form means that online OTP, online payment, whatever we do, Flipkart payment, all those things are called as electronic check, where the checks are generated using electronic systems, computer systems, using the internet, IP, everything is used to generate that. What is electronic image of truncated check? If you remember the main class where we discussed that whatever the physical check is given, that will be scanned, and the scanned copy, scanned photocopy is called as electronic image of truncated check. Instead of sending that physical check to the other bank or other city, they will send the electronic image of that. If it is correct, then money will be transferred. So it shows that you machine, yes. So this is the electronic image of truncated check. The moment the physical checks are sent, that will scan. And you look at the monitor, the checks will automatically come. That is called as electronic image of truncated. Truncation means converting physical into electronic. Electronic image of the converted checks are called as electronic image of truncated check. Electronic check means the check which are generally using electronic gadgets. Now, payable on demand means what? Only when somebody wants the money, they should go to the bank, submit the check, get the money. It is unless until you demand the money, they don't give the money to you. Here, this explanation is okay. I'll ignore it. Parties to the check. There are drawer and drawee and payee. Who is the drawer of the check? Drawer. The person who writes the check is a drawer of the check. If I am giving money to you by a check, then I am a drawer. Drawer is a person who draws his check. That means makes the check. What is the drawing? Who is the drawing? Here, definitely a bank is a drawing. If I give the SBI check, SBI is a drawing. If I give Axis Bank check, Axis is a drawing. So, specific bank on whom the check is drawn is called as a drawing. And pay is the person who is named in that instrument. Pay B, pay C, pay D, CD are the pays. The person who is named in the instrument, that is called as pays. Drawer, drawing, and pay. What are the characteristics of check? Same. Check is specifies the bill of exchange. Okay. Thus, it should fulfill all the essential characteristics of bill. Order, payment order, different persons, everything should be there. Plus, extra two, Drawn on specified banker, payable on demand. Drawn on specified banker, payable on demand. This is again an important question. Classification of negotiable instrument. Classification of negotiable instrument. The negotiable instruments are classified. The negotiable instruments are classified based on bearer instrument and order instrument. So, what is bearer instrument? Whoever holds that instrument will get the money. It's called as bearer instrument. I'm not talking about bearer check. I'm not talking about bearer promissory note. I'm not talking about bearer bill of exchange. Whatever I'm discussing, that is for every instrument, negotiable instrument, not for check or anything. It is for different language. Classification of negotiable instrument, not check. Everybody it is applicable. So, bearer instrument is an instrument in which the payee name is blank. The payee name is blank, or where the name of the pay is specified in the words. The word bearer. Either you leave it blank or you write bearer. Pay to bearer. That is called as bearer instrument. Here, this bearer instrument can be encashed. That means you can give the instrument and get the cash immediately in a cash counter. But when it comes to order instrument, where it is payable to a specified person. It is payable to a specified person. Only that person can encash the money. If he wants to transfer it to some other party, sign it on back of the instrument, transfer it, endorse and sign. Again endorse and sign. Again endorse and sign. This is how it happens. So order instrument cannot be encashed for cash immediately. It should be deposited in your bank account. You give it to the bank, bank will put the money into your account, then only you can withdraw the account. You can't directly take the cash with respect to those instruments. Order and bearer instrument. First classification. Then very important classification is inland instrument and foreign instrument. Inland instrument and foreign instrument. So what is inland instrument? Inland instrument is that instrument which fulfills two conditions at least. Here there are condition 1, condition 2A and 2B. So what are these conditions? What are these conditions? See there. The check which is drawn or made in India. First one. Made or drawn in India. Second point is it is and payable in India or payable upon resident in India. Payable in India or payable on resident of India. Either it can be 1 and 2A. And this is R. So either it can be 1 and 2A or it is 1 and 2B. We have given many examples in the class. You can go through the examples. That is inland instrument. What is foreign instrument? Other than inland is called as foreign instrument. The next two types of instruments are inquiry instrument and ambiguous instrument. What is inquiry instrument? Inquiry means incomplete instrument. Incomplete instrument, where the instrument is incomplete by itself. That is called as inquiry or incomplete instrument. For example, date is missing. For example, amount is missing. For example, name is missing. For example, something is missing in the instrument. How do you make it right? Whatever missing information, make it complete. That is called as quiet instrument. That is complete instrument. Then we have ambiguous instrument. What is ambiguous instrument? An instrument which can be treated either as a promissory note or bill of exchange. Both the ways it is possible. Because they did not write the word I unconditionally undertake to promise or to order. Ergo missing there. Both are missing. Then I can treat it as promissory note also. I can treat it as bill of exchange also. But if I treat it as bill of exchange, for all the further transfers it is bill of exchange. If I treat it as promissory note, every further transfer is also promissory note. The first treatment happens, that will decide the characteristics of the instrument in the further transfers. That is inquired and this ambiguous instrument. So how can you transfer? You can transfer by delivery or endorsement and delivery. There are two types of negotiation. When asked 4 marks question, what are the types of negotiation? Two types. One is only delivery. Second one is endorsement and delivery. What do you mean by only delivery? For example, if it is a check, I think we have this is the class notes, discuss notes. If it is a check, what is in the near delivery? If you don't write Mr. A, if you just write the word bearer, or you leave it blank and fill all the information here, signature, everything is done. You can no need to sign again back of the instrument. For example, I give it to one A is given to B is given to C is again given to D. Every further transfers, no need to sign on the back of the instrument and give it. That is called as mere delivery. Mere means only delivery. Second one is endorsement and delivery. For example, if I write pay to Samota. Now, everything is written. Whenever I give it to Samota, directly I give it because I already signed there. If Samota wants to give it to some other party, for example, Kasturi, then turn the instrument back. Here she has to write to pay to Kasturi and she has to sign it and she has to give it to Kasturi. If she simply write pay to Kasturi is not written, just sign it and write. Then again is a blank. You can go by mere delivery. Endorsement and delivery is not required. Whenever the 10th party gets, he can write his name, then he can encash the money. There are two types of delivery. Endorsement and delivery and mere delivery. This is again an important part. This sum of check for insufficiency of funds in India. They can ask 4 marks question. Whenever you check to somebody and you don't maintain the balance in the account after giving the check, then the other party goes to the bank and submits the check, and the check comes back to him stating insufficient funds. Then he will be liable for section 138. Section 138 of Negotiable Instrument Act 1881, which says before this punishment is applicable, there is some compliance part that also has to be seen. We will see it later. What is the punishment? First, we will see. If there is a check which is dishonored for non-availability of balance, then the bank has liability will be imprisonment up to 2 years and penalty up to 2 times of the amount mentioned in the check, or both. Anything can happen. When this happens, this is applicable only when you give an instrument to somebody, check, he went to a bank said balance is not available. The moment bank marks that balance is not available, within 30 days, he should communicate to you, sir, balance is not available, please make sure you give the money. Within 30 days also, if I don't reply, or if he does not connect me, then he can't go for section 138. Bank rejected the check, within 30 days of rejection, he should come to the owner of the check. Once it is given to the owner should pay within 15 days to him. 30 plus 15 days, 45 days. If the owner fails to pay within 15 days of receipt of the intimation from the other party, then he can go for 138. Check this solvent within 30 days, talk to the owner. That you can immediately next day, whenever you talk. From the day you spoke, or 30th day, whenever you communicate within 15 days, owner has to make arrangement for payment. If he does not make at the end of 45th day, 30 plus 15, 45th day, then you can go for 138. That is very important. And this validity is this check 138 will not apply unless the following condition, same thing. Check is presented within the validity period. So what is the validity period? Validity period is 3 months from the date when it is mentioned. If I write 1/1/25, Jan, Feb, March, within 31st of March you have to submit that. If you don't submit, that's over. Then demand for payment through notice. Once it is rejected, say give a notice, 30 days, then ask for payment. If the maker fails to make the payment, then within 15 days of the payment of notice, then you can go for 130. 30 days you should intimate, 15 days you should make the payment. Now, presentment of this is a common. I'll directly discuss presentment of instrument. I'll directly discuss only what is important. Presentment for acceptance. What is presentment for acceptance? If you want the money, I should accept the instrument. If I want to accept the instrument, you should come and present. Then only you will get the payment. Presentment for instrument acceptance. Presentment of promissory note for site. Unless until you show the promissory note, you won't get the money. You are not eligible to get the money. For site means visible. Show. So it is payment after certain period of after site must be presented to the maker for site. That means whenever you show that instrument, 10 days within the date of you show, you make the payment to you. Presentment for payment. Payment also we have present as well. Hours for presentment. When you should present, you should generally present in business hours. Business hours. And if it is a bankers within banking hours, that means if it is promissory note and bill of exchange, business hours. If it is check, then banking hours. What is business hours? 9 a.m. to 6 p.m. 9 a.m. to 6 p.m. Presentment for instrument. Paper at specified place and not elsewhere. I'll tell you should bring that and present it in my this cafe. Then I'll make the payment. If not, if you show it somewhere, no payment is available. Specified place. Instrument table at a specified place. Same. If no place is there decided, then if I did not tell present it here, then I try to go for wherever my residence is here. Sorry, first go for my place of business, or you go to my residence if I am not available at business place. You have to present there. If I don't have any place for business or residence, I am on Abhepad. I don't have any place on it. Then wherever it can be found, you have to present it. This is also important. 4 marks question. When the presentment is unnecessary, you don't need to present the instrument to get the payment. If the maker, drawing, or acceptor initially prevents the presentment for instrument, I tell you have to present in CCD only. But I like at the entry of CCD, I made sure that there are 2 body parts. That the person will not come into the CCD. I am preventing. I am intentionally preventing the other party from presentment. Then this is not valid. If the instrument being payable at its place of business, and the business case is closed on such day during business hours, then also you can directly ask the money without payment, without present payment. If the instrument is payable on some other place, neither you nor any person authorized by you found in that place in usual business hours, then also presentment is not required. If the instrument not being payable at any specified place, then it cannot be searched found after due search, then also presentment is not necessary. Then, as against the party, after maturity, with the knowledge of that the instrument has not been presented, he makes a part payment on account of the amount due on the instrument. 10,000 I should pay. I paid only 5,000. He accepted without any question. It is as good as presentment is not necessary for other things. Or promise to pay the amount due thereon in whole or part. Or otherwise gives the right to take advantage of any default presentment. I only tell, okay, even if you don't present also that's okay. You can directly I make the payment direct. That's what it is. That's it. So any part you can see. The very important parts here is the characteristics part, then classification of instrument part, and negotiation. This is May 26, September 25, September 24 exam paper. Sorry, previous paper 26 May and 25 May September RTP paper and MTP. Can you read this? What is the question? About the question is talking about bill of exchange on the one who accepted a payable to Magan or Arnav. Magan endorsed the bill to Gagan. Gagan endorsed the bill to Akash. Okay, to be delivered to him on the next day. However, the death of Gagan, Gagan endorsed the bill to Akash. Already endorsed, signed and given, wrote the Akash name, but the delivery, like instrument will be given tomorrow. However, the death of Gagan on the same day, intend on this, Gagan on the same day, his only son Ankit delivered the bill to Akash on the next day as intended by his deceased father. On presenting the bill on the due date, Baban refused to pay. Who is Baban here? Okay. Baban refused to pay. Explain the importance of delivery negotiation. Decide whether Akash can enforce the payment of the bill against the Baban or the previous parties. Yes, definitely, because it is already endorsed and delivered it to the party. That is delivered by some party or not, that's secondary. But is it endorsed by the previous owner? Yes, it can enforce it. Reliable Limited, an Indian company, is a global leader in petrochemical products. For the payment of the sale price of machinery imported from Alex Manufacturing Limited, US-based company, the Indian company drew bill of exchange on Manish, a resident. Okay, it is some type of classification of bill of exchange. Where is it? US-based company. The Indian company drew the bill on Mumbai. Where did they draw? India. Serious. Is it Alex Indian company, USA company? The Indian company drew a bill of exchange on Manish, a residents of Mumbai. Wait, can I to say again? Drew a bill of Manish, a resident of Mumbai, Alex. Okay, Mumbai. Who accepted the bill at Mumbai? That means Mumbai will accepted. Payment to export in USA. That means payable in USA. Now, three conditions are there to reside in that bill. Should be drawn in India. Is it drawn in India? Drawn. Then second part condition is should be drawn on a person resident in India or made payable in India. Here second part, first part is there. Second 2A. Payable by Indian resident, because of which it is called as England instrument. We'll see it. Let's answer. It is an England instrument. We will have a part later. It is an England instrument later. Then June 24th, May 26 RTP, September 25 RTP, May 25 RTP. Payable at certain period after site must be presented to the maker thereof for payment. Under which scenarios, presentment for payment is not necessary. Just now we discussed that, not necessary presentment. And the instrument is disarmed at the due date for presentment according to the provisions. What are those situations where presentment is not required? He prevented the party from presenting. Is presented. It is required to be presented at some place, but is not found in that place. He went to the business place, but the business is closed and the business hours on the working day. Then he has no usual place of residence, but he could not be found even after reasonable search also. Some points you have to write. Reading that. What is here? This is asked in Jan 26 exam, 7 marks. What is provision note? What are the essential elements that must be present for documenting to be considered as valuable characteristics? Direct question. Writing, stamp, party should be certain, amount should be there, specific. This one, Jan 26 previous year. Okay. Alok bought some goods from Manish and credit. Alok is a buyer. Manish is a seller. Later issued a check for that dues from his bank account and asked Manish to encash the check within 2 days. On the day of Alok issued the check, there was a sufficient balance to pay Manish due. Manish presented the check after 1 month. Is it valid? Yes, 3 months is the validity date. Whether he tells 2 days, 1 day, it doesn't matter. Check validity is 3 months. Which was returned to be insufficient funds. Okay. Manish made a demand for the payment, but Alok failed to pay. Manish sent him a notice to pay the outstanding debts. Alok ignored the notice. Manish filed a case for disallowal of the check. When defended himself on the ground, Manish failed to encash the check within 2 days. Oh, I told him to take it in 2 days, but he failed to do it. I don't care. Check anyway has 90 days. 3 months I can do it in 90 days. This is not correct. And he had no reasons to believe at the time of issuance of the check that it might be dishonored. Analyze whether Alok's defense are valid, not valid, because check maturity 3 months down right there. Part. Whether Manish can file a suit against Alok for dishonour of check within how many days? He can file a complaint after dishonour. On the date which is dishonored, returned and dishonored. Returned as dishonour. Within 30 days, you should file. You should give a notice to the owner, the maker. Within 15 days, maker should try to make the payment. If they fail to do it in 15 days, then you can go for 138, file a complaint. That is possible. Section 138. Similar questions only. They are similar paper. Here they ask the difference between promissory note and bill of exchange. To mark that also important. When is it asked? May 25 paper. Mark difference between promissory note and bill of exchange. Same question only, like 138 question. It's also asked in May 25 previous year paper. They are asking all the checks are bills of exchange, but all the bills are not checks because all the checks contain all the essential characteristics of bill of exchange. Plus 2 extra characteristics also should be there. Drawn on a specified banker, made payable only on the demand. Those things are not there in bill of exchange. Ambiguous instrument you have to answer. Ambiguous instrument is ambiguous in respect to interpretation as promissory note bill of exchange. September 24 paper. Same that Indian foreign instrument. Unimproved bill in Calcutta, okay, in India. On Bimal, resident of New York, okay, made payable in Delhi. That means still Indian instrument. Drawn in India, payable in India. Payable on person resident outside India, that's okay, not a problem. And maturity will not this out again. Sued Bimal in India, claiming interest at a rate of 18% as applicable. In Calcutta, Bimal contended New York law, it should be only 6% interest. In India, it is 18%. So, when it is an Indian instrument, Indian rules are applicable. You can't apply New York rules because of which 18% is valid. Bimal is liable to pay 18% as paid by Anil. what are required and ambiguous instrument under negotiable instrument act? Very simple question, direct question. This is a mock test paper question. Again, same inquired and ambiguous, same question. That's okay. You can go through it once again. Tomorrow we will be discussing contract and slogan. Do you guys have any notes? You can come and ask me tomorrow. And then you are also still there. Understood? And last. You can leave. And then people also have, if you have any doubts, you can come in. You can contact us directly. So now we completed with Companies Act, LLP Partnership, Negotiable Instrument Act. 4 chapters. So 2 connected chapters, that is contract act ICAI and slogan, which we will be discussing in tomorrow's class. IRF, the type contracts will discuss it, but you have to be doing that yourself. So that's it for today's class. You can go through it. If you have any notes, you can type us at any time. Thank you. And if you like this video, please like, subscribe, share the video with your friends so that other people also get used to it, use of it. Thank you.